Rajan. Thank you very much for joining us today.
I'm fearful to say it's now 19 years. I'm older, so yeah.
Well, the wiser you get. I want to kick off right away with the trinity that is money management, psychology, and technicals, and these are heavy components for anyone's journey in trading.
Yeah.
But how would you rank or prioritize, or what is your philosophy on the dynamics of the three?
Yeah, so we call it the 33% rules. So it is 33% risk
Okay.
management, 33% psychology, and 33% strategy. So that's how we kind of manage it. I don't think there is one that's more important than the other. I think when a lot of new traders come to the market, they think, oh, it's the strategy that makes you money. I really don't think it is. So that's why we split it evenly between them.
I think it's the best way to do it. I've had both sides of the spectrum on the show, and I find sometimes people use psychology as a scapegoat. It's like I don't have a clue on my technicals. I haven't put the time or effort to solidify it, but it must be my psychology, and it can become an easy way out.
Yeah.
But there is truth within it. So if you can help me dance that delicate line of coping mechanism or blaming psychology versus no, this is where it needs to be addressed.
Yeah, I think the psychology creeps in areas that you don't really expect. So what I would say to any trader is if you do have any psychological flaws, the market will find it.
And amplify it, yes.
That's what I truly believe in. And obviously coaching traders for so long now, I've seen it happen, whether it be impatience, whether it be fearfulness, whether it be over aggressiveness, however you are at one stage or another, you're going to have a good day one day, you're going to have a bad day one day, you're going to be happy one day, you're going to be sad one day, you're going to be depressed. These are all things, if you're not psychologically well built to manage these situations, the market will take it from you.
I believe that the markets can amplify the emotions you already have, or large numbers can amplify whatever. If you have a bit of greed, the market will bring it out of you, for example. And I found in my own experience that the way I traded in terms of a technical perspective, I tried to cater it in a way that would support my individual psychology. For example, I learned after a few years that I don't like seeing a big number in profit and then having a 50% retracement. That retracement portion, which might be just a couple of days, eats me alive and I take irrational decisions. So long story short, but then I ended up being a more intraday trader because I like the instant feedback and it catered to my personality more.
Yeah.
How much do you believe technicals can support your personality type, or should psychology be its own thing that is addressed?
So the market wouldn't care about you in that situation, right? It does what it does regardless of whether you're in it or not. So I would say that statistically, if you continuously trade like that in that way and it produces numbers, that one trade or that one issue shouldn't bother you because it's not anything can happen at any one given moment. It's the sample size that's important. So let's say you had that scenario where you have a 50% drawdown on a trade. Let's say, for example, 70% of them came down to your 50% drawdown level, but the 30% of them went to 5x, 6x after. You're doing okay, but you're not allowing yourself to know that because of the psychology. The psychology is what kills you to find that out. And that's the problem.
You mean if people take decisions too early based on psychology,
100%.
you don't have a sufficient sample size to find the data of what's the truth, and it's an emotional decision.
Correct. And that's why day trading has like an allure for the instant feedback, like you said. But the issue is in day trading, you have less time to make those emotional decisions. This is why day trading is harder than swing trading for a new trader, because you're having to make the same kind of decisions in a fraction of the time. Like for a swing trader, you could have a day, maybe even a couple of days to decide whether you're taking profit, when you're going to move your stop, how you're going to trail it. But when you're day trading, you've got milliseconds, sometimes seconds to make that same decision. And they're not going to be the same quality decisions. It takes a lot of training.
Yes. On this topic, I didn't mean to end up here, but kind of swing trading or high time frame trading versus day trading, scalping. So of course there is you can call it decision fatigue, or just you got to be on the ball on a lower time frame trading type. At the same time, I just want to talk about, let's say, variance or degree of certainty linked to time, in the sense of if I just look at market open on euro dollar, the chances that it will be 10 pips higher and 10 pips lower, just that box, you could probably call it with like a 80% certainty it will be within that box. But then if you ask me where is it going to be in 1 year compared to 10 minutes, as time goes on, it can go 100 pips down or 1,000 pips down or 1,000 pips up. So duration, I guess, would reduce your confidence in where price could be. Would that come into influence when you're talking about day trading versus swing trading?
It does, but it still has the same degree of certainty at the end of the day. It's still 50-50, right? If we said that 1,000, 1,000, or 10 and 10. So it does come into aspect, but it's still a coin flip if you're looking at it in that respect, because the variables that we have over a long-term period, there's a lot more variables over that period of time. Trump elections, Powell,
war breaks out.
Exactly, all that kind of stuff. But during an intraday trade, we still have variables, but obviously they're easier to cope with because they're a certain amount of time. So today's example, there was like some bombing in Qatar today, but nobody had that on the cards today. I don't think anybody would have thought about that. So
these things you can't forecast.
See what I'm saying? So it's still there, and the averaging of that number, of the probability of that number, is still the same because we've chose something that's equal.
Just on this topic of probability, so I came across this table, and you're probably familiar with it, and it was basically the probability of X number of losses in 100 trade sample size, and it was win rates against number of losses in a row. And for me, if someone was to just ask me blindly, what's the percentage chance you have 7 losses in a row or 6 losses in a row in 100 trade sample size, I'll be like, it's unlikely. I don't get 7 losses in a row.
No, it's likely.
In 100 trade sample size, 7 losses in a row, the probability was something like 60-70%.
It's
extremely high. To the point where it's like something you have to face at some point in your career. 7 losses in a row. Talk to me about this matrix of probabilities of losses in a row and how you can psychologically adapt or have money management systems in place.
So this is something that we involve and delve into deeply. This is the heart of D&D and how we trade, right? So I trade the same way every single day. Every single day, I take pictures of the trades. They look the same. Everything is the same about it every day. When we started the company, we monitored the first up to 400 trades. So 400 trading days. I only take 1 trade a day. In those, we had 8 losses in a row, 8 winners in a row. Through the sequence of the documents where I keep the records of this, it happened 4 times over those 400 trades. That we lost 8 in a row. That was the worst losing streak and the most winning streak, consecutive winners and losers. In that period of time, though, it doesn't account for where you might have 3 winners, 1 loser, and then 8 winners or something. So then the compound effect of that is encountered in that. And this is where I think the consecutive losers and winners thing comes in. You have to be prepared, I think, to get between 7 and 14 trades in a row wrong, worst case scenario. So if you're trading 1% per trade, which is what a lot of the gurus tell you or whatever, are you prepared to have a 14% drawdown? And how will you psychologically react on a 14% drawdown? So we look at drawdown values on worst case scenario basis. And normally our traders use a 30 trade worst case scenario drawdown.
30, huh? Where did you get the numbers 7 to 14? What is that symbolic of?
Practice. It's actually real data. So it's simulated data, as in like data from real markets, but then also forward testing data and live trading data. That's how we know the answer.
And the reason you decided these numbers is because in a 1 year sample size, you will encounter it once or twice. Hence, be prepared for that.
But it goes for you as well. It's non-discriminate. So it's absolutely fine if it goes for you or against you. But 1% of your account balance is too high if that's what you're thinking. So if you're starting, let's say, with 100 grand, if we use that for easy maths, and you're trading $1,000 a trade, are you willing to lose $14,000 and still psychologically perform in the same way? Not many traders can do that. And that's the issue of why a lot of traders don't make it.
Let's take a moment to talk about a partner of the show, a leading prop firm that is funded.
Always equities, because it's a historical thing. This year was actually very good. The volume was decent in August this year, but the previous 2 years it was very poor. So the strategies weren't working in the same way. And what we mean by that is, because I normally trade around the US Open, we wouldn't see as much volatility in terms of how far things would run around the Open in those months. And that just means you're not going to hit your targets, right, for your trades with the same stop losses.
Does that mean you try a different strategy for this period, or just drop down risk and be conservative?
drop down risk and be conservative, and also book a holiday for the summer.
Okay.
Yeah, that's it. So I go away for 2 weeks every summer.
Meaning to say, pick your battles and know when to be on.
Yeah. This summer, like I said, was a really good summer, and is unusual for us to have it like this. But in the previous 2 years, our strategies didn't work as well in the summer as they did in the other times.
Talking about drawdown periods, there is also a conflicting approach you could have, where one party may say, let me maintain my risk throughout. Let's say call it 1% risk, even during 5 losses, 7 losses in a row. I want to maintain that risk because when I encounter my winning period again, I can recover at the same rate. Whereas others may drop their risk during a losing period for psychology reasons, but then you're longer in the hole, and that might amplify psychology because now instead of 3 weeks, you're 6 weeks in the hole. Yeah. What is your view on that?
You're trading at that time something you don't know the answer to. So I follow the rules of the drawdowns. So like if you've given yourself a drawdown level of 20%, you trade the same way until you hit the 20%. That's my personal opinion of it. The other thing is that a lot of people don't consider the percentages of compounding of drawdowns. They only consider percentage of compounding of profits.
Compound drawdowns.
To me, that's not great. So like, for example, you start an account with 10 grand, you drop it down to 5 grand because you've lost. You now have to make 100% to get it back to normal. Who makes 100% in a year, right? This is what I find interesting about compounding. It works on the way down in the same way as it works on the way up. So if you're reducing your position size when you're losing, but increasing it when you're winning, that makes more sense automatically. Yeah. So if you have levels in which you reduce your position size on your way down, that would be my advice to anyone. So if you started with a 10 grand account, you say, okay, well, if it goes down to 9 grand, I might drop my position size a little bit. If it goes down there, yes, like you said, it takes you longer to catch up. But the whole point is to stay in the game until you know how to trade properly.
Talking on psychology, there's multiple ways to describe it. One could be sitting in the emotion until exposure therapy, until you're desensitized to that stimulus and you can make better decisions. Another one is putting in protocols in place. For example, after X amount of losses, I've got to walk away, and then trying your best to adhere to it. Another one is when you just go through turmoil, you go on tilt. You know what the right decision is. And you're fully aware. You've got a trading plan, tick boxes, whatever you choose. But adherence to that, psychology becomes the problem to adhere to the plan. Specifically on that portion, how can you internalize beliefs that we all know about of what is good psychology, but doing it is the hard part? How can you exercise that muscle a little bit better of adherence to the plan?
I think this is the reason why psychology is important. So I trade a professional trader who works at a very prominent institutional organization. He's a professional trader, has been for 20 odd years. Now, at the moment, he's been struggling with this. So he's got some problems outside of trading, the trading world. He's busy, he's stressed, etc. He's come into the office. He's not trading very well. But then he thinks that because he's not trading well, he has to catch up. And this is somebody that's a professional trader that's been trading well for a very long period of time. And it gets somebody like that. So we're not perfect, right? But what I would always say to somebody is that we have to have a process and a plan for when we're not perfect, because it's not possible just to run at top performance level, all of the time. Look at it the same way as a sportsman. A sportsman's going to have an off day. So you need a process for that, and whether it be, to let's say, for example, if you've lost 5 trades in a row, simulate trades till you get back. Yeah, but this might not feel right for somebody who's new to trading, because the markets don't go anywhere, they never go. And if you're planning on trading for 10 years, that little period is going to be nothing to you. But for somebody who's new to trading, they might start winning and think, I should have been trading live then.
Yes.
But that's the psychological issue, right? So yeah, going back to this, I would definitely say, depending on each person, especially the tilt thing, everyone's different. Some people are very dense to their emotions and they might not understand and not be able to look from an outsider's perspective. Some people are able to look intrinsically and work it out, and it really depends on the person when they're on tilt.
Mm-hmm. I want to pivot towards technicals here, and obviously you're part of I didn't know about this prior, but a prestigious institution for technical analysis, a society. Yeah. And I guess you train all walks of life from a professional background, university grads and so forth, and you're teaching them the art of technical analysis. I want to first start off with, these guys are usually academics and probably high intellectual and so forth, high IQ. And then you've also trained people that are in a regular community. What is the difference you notice in the ability to learn or grasp or conceptualize or over intellectualize when it comes to trading and technical analysis?
Yeah, so there's no difference in terms of who can make it and who can't make it. That's one thing that I would say. Resources are an issue, right? So if you work for a bank or whatever, you have more resources. But in terms of intelligence, there's no difference between the two. That's the first thing I would say. One thing I would say is that I would choose an emotionally intelligent person, 75% of the time, more than an academically intelligent person.
Interesting.
Personally. So like, for example, on the pit days back in the day, they would choose like market traders and stuff, because they have a gut feel. They know when something's being undervalued, underpriced, or overvalued and overpriced. And that was a good thing for them. But they weren't always, academically intelligent. Then we moved over to the quant trading time and all that kind of stuff. I lived through that phase. And I was saying to yourself, like I had, a very, very top level maths graduate. He had a master's, a PhD, master's learning for his PhD in actuarial sciences. And he just couldn't cope with the strategies not working in the same as the simulators as they would in real life. And yes, he had intellect and he developed very good trading systems, but he didn't have the emotional IQ to understand it. And that's where he needed to be trained. And then at the Society of Technical Analysis, we've had people there from, people that work at gas and power companies to big investment banks to central bankers down to crypto traders. It's anybody can come there to learn about technical analysis. But it was a really, really good experience to basically see, because I keep in touch with a lot of people anyway with their learning and where they end up working and stuff, of who can stay in the market, who can continue on the path of trading. Because we had a brief discussion and I said that technical analysis, it teaches you how to be an analyst, right? Trading teaches you how to be a trader. They're two completely separate things. An analyst can't be a trader sometimes. A trader can't be an analyst sometimes. They're two different jobs.
You mentioned moments ago emotional intelligence. Number one, what do you mean by that? And number two, how can you specifically train that to get better at it?
It's tough. That's the tough part, because we're talking a lot about ego, pride, sometimes things like that.
Oh.
So when you're in your learning phase, adults, they're very different learners to children. So an adult will come into something automatically wanting to be good at it and get frustrated that they're not good at something. You can't expect to be a good trader. No one can when they walk through the door. Basically, even if you have a really good run at the beginning, what happens when you start losing? How do you react? That's going to be twice as bad if you start.
Can you hear me now?
Well, but if you start tough and then you go through the tough period and then you build yourself out of it, in my history of coaching traders, that ends up being better because then they build resilience. Whereas if you do really that ends up being better because then they build resilience. You have to. Whereas if you do it at a later state after being successful, so little things like that, they're always really, really tricky. Emotional intelligence for trading can come down to being impatient and finding out, watching yourself from the outside as like, why did I get impatient there? When you're in profit situations and you're too quick to grab your profit, or being too greedy and trying to let it run. Moving your stop losses on the downside because you have hope. All of these things are emotional intelligence. Why are you doing these things? How do you analyze yourself to stop? Not analyze the chart. How do you analyze yourself to stop?
I'm very interested in the word ego. I want to explore this a little bit more, because ego can be self-worth, self-preservation, confidence, and that can be tied to data. So you're like, I've built my ego in the market because I've seen, I've had profit for so long. But it can also tip into overzealous and thinking better than the plan, and taking intuition too far, for example. What does ego mean to you, and where is that sweet spot to have an ego?
Ego is a good thing if it drives you forward, and it pushes you to improve and learn and get better. That's when ego is a good thing. So it's important to care about yourself, and even to a certain degree, like how you look on the outside sometimes. I think that's an important thing, because you don't want to look like an idiot and you don't want to be an idiot, right? So that's the good part of ego. The bad part of ego is that, like, for example, if you're trying to learn something and you're like you're not honest with yourself that you're finding something hard, or something else is everybody else's fault. Oh, I got stopped by a broker, my spread's been slipped, everything's everybody else's fault and none of it's my fault. Sometimes that's ego as well, right? So they're things that are going to stop you from learning. They're going to stop you from looking at yourself and working out what your problems actually are and blaming everybody else for them.
That makes sense. You hinder your own progress. How about identity and how that comes into...
It's going to get so hard to listen to after a while. I need some music, bro. Pause there, go to this, open this up, and let's pause there, go to this, open this up, and let's pause there, go to this, open this up, and so my microphone isn't quiet, my music is really fucking loud. There you go. Just turn that down a bit. There you go. That should be way better. Do you have an ebook reader? You think I could feed Claude with raw data of my indicators and of the chart movement and then ask it to... Yes. Yeah, I've done that. He didn't really come up with much that was good. He looks for weird shit. You kind of want to guide him into what you want to look for. Like, he will automatically try to filter by time and day. So if you want him to use the indicator to predict the next candle, you need to say that. If you're like, I want to use the indicator to see if it catches the high or the low, you need to say that. Otherwise, he'll just start looking for whatever he wants to look for, and it's usually arbitrary shit. You can ask Claude, like you could say, hey, what if I asked you to analyze some data, what correlations would you look for? And refine it with him. And do all that and then give him the data. That was a good piece of advice. Can you clip that on Twitch for me, would you? Clip that? Can I clip that? I don't even know how to clip that. I don't know how to clip it. Actually. They should be on. Damn it. That was a good piece of advice. How do I clip that? Hopefully it lets me save the VOD later. What is the actual physical time right now? 10:35. The rules of my strat, right there. Oh, thank you. I haven't really said much. My current setup, my new trading system, the one I've been trading live-ish. Where is it? This one I started with a $50 account yesterday. Now I'm at $59, but I might only take one trade in a day. So, yeah, it's the system in the book, yeah. Well, kind of. No, it is the system in the book, but my money management's really different. I haven't really explained. I've got this new... I'm more testing the money management idea than I am the strategy. Because I know the strategy works, but I'm not good enough. It's really complex, and I'm not good enough to code it. So it's all drawn on my chart instead. And I know I'm big on coding, right? I'm big on coding, and like I'm up $166 on yesterday, right, on my main account. But this one, I'm not good enough to code this system. So there's a lot to it, and a lot of like interpretation of the rules. And I know that it works. I'm experimenting with a money management setup. In fact, saying that, I had one running in here. Where is he? I think it's confused actually. But it wasn't like the money management I was running in this system wasn't going my way in this EA when it pops up. Wasn't really going my way. But shit happens sometimes. In fact, it was going pretty hard against me. So anyway, you're right, I might as well fucking edit my book while I'm waiting for nothing to happen, right? Now I can take this and link to glossary, strats and strategies there. Man, look, this is going crazy. I need to pause this. It's going crazy, doing weird shit. So we close all. Do it again. Close all. Why is it opening a trade when it should be closing all? Ah, okay. We close every window except for that one. And let it run. At $40, we let it run. How is Christmas in the south side of the planet? Hot! I don't really do Christmas, so I don't really care, but okay, I really don't do Christmas. I have a nickname. Well, I am often nicknamed the Grinch at Christmas time. But to answer your question, it's the hottest part of summer. So yeah. What was that? This is interesting reading this again. There's lots of little bits I'm adding to it and stuff. Is that going to just hover there all day? I'm reading it right now, mate. I think I've said this before. I wonder why I've put that in there. Whatever. Why is this here? Let's find the music. I think this one's the music. Let's find this thread. And what's this clip?
Once I've marked up my chart and I've done analysis on whatever instrument I'm trading, which is usually going to be platinum or crude oil, I wait for the price to break one of these areas, one of these trend lines, and then it gets a name. So now it's either an action line or a safety line. The action line is when I take my entry. Safety line is what keeps me safe, and that's where I will trail my stop along. If this isn't a fake out, if this is truly a trend reversal, I get to trail my stop into profit. It's essentially when price breaks that new trend line is when I will either take my loss or I'll take my profit. And it's pretty clear. If it's going to trend along this new line, okay, as soon as it breaks and it's done, the trade is closed.
Yeah, but I don't think that should be in there. I mean, I could put that in my save list, but I don't feel like that should be in here. Okay. Is it? Oh yeah. It is a bit. It's pretty good though. Where's my yeah. I don't think I have this. Alright, let's not do this. Actually, you know what? Let's delete this. Delete this. Why can't I duplicate? You should be motivated or disciplined at a time when you still have a choice. Maybe that's something you want to put in your book. I'm not sure what you mean. I mean, it sounds like something I would say, but I don't know what I meant by that when I said it. If that's what I said, can you extrapolate? I've forgotten my own wisdom, I guess, or it's just obvious to me and I don't get it. Or I didn't say it at all. Alright. Maybe, I guess, sorta, kinda. It comes back to plan A and plan B. Well, I mean, it's true that, you know, trading or learning to trade or practicing your trades from a calm place is going to be better than yeah, it's going to be better for you than an alternative where you're trading emotionally and making weird decisions. This is why I don't put stop losses in. I don't use stop losses anymore. Well, instead of using a stop loss, I just place the opposite trade. Actually, what I do need to do is put a beacon here. Where's the oh, there. POI red extended alert go. Fuck, I'm getting hungry. Yeah, boring, man. Boring day, bro. Yeah, so if you put a stop loss on instead of if you put a hedge trade on instead of a stop loss, and the hedge trade keeps going down, you can close it, and if it comes back up, then you close this one, then you've made money. Because if they both go down, you break even the whole way. Say it gets down to this level, right? This is how this works. So I placed a long trade here, and then I placed my stop loss, which is this trade here, right? And then it went against me and it went down. So this trade triggered. Now every time this one these move together now, so I don't make or lose anything. I break even. No matter where they go, I'm at break even. Minus 60 cents on this account, right? So if I'd put a stop loss on, I'd just lose 60 cents, okay? But now I'm down 60 cents with an open trade that's worth 30. Now if this one comes down to here, hits this level and bounces again, it'll close this trade in profit, and then it only needs to go back 60 cents and I close it and I'm break even. But it's more likely to bounce off this and come back a little bit and get my pullback where I can close out. And then I've either broken even, or if it keeps going up and comes back to here, then I've made that whole $2. Because I made $2 here, and then when this pulls back, this one here, which is $2.20 in drawdown as well, then comes back to $1 or whatever, and I've made money. Because as this draws back, my equity increases, right? And I made money when I closed this one. And then if this gets down here and then closes this and then keeps going, what I'm supposed to have is another one on this side, like that. So it catches the next move down whenever that catches up and places the trade. At some point there'll be a big pullback and I'll make money here and here, and then there'll be a pullback, and in that pullback I can close this losing trade at break even or even profit. As long as these zones here... What the fuck? No. Weird. As long as these zones here are bigger than these zones here, overall eventually you'll make profit. And that just cost me 55 cents on this account, which is like 1 fucking %, which is annoying. Yeah.
So apparently Pokemon's cookie company has collapsed. Is this true?
Pokemon Cookies, which she released in late 2023, and I think I've uncovered something. I think this company secretly went out of business.
So all of the places and everything that they're posting is totally all bullshit?
You go to the contact page, they have no contact information. They don't have an email.
It's over. It's done.
So I actually reached out to Pokimane. Is the business shut down? Never heard back from Pokimane.
What a
I also
surprise.
reached out directly to the company Minus Snack, and again, I never heard back from them. So I don't think Pokimane Cookie Company, I don't think they're still in business. There was a lot of controversy right from the beginning because of how expensive these cookies were.
I remember that very well. People were mad. They were so expensive.
We basically made this brand because why are there not more snacks that are simply healthy, tasty?
Then got exposed that there's actually cookies from Costco called Midnight Mini Cookies, which had the exact same nutritional values as these cookies were only $10 for 14 ounces. Pokimane's cookies were 16 ounces, was $28.
If Pokimane did like a video, she's like, yeah, I'm shutting down my cookie company, there would probably be like 100 videos of people talking about it. A lot of people don't really like Pokimane.
People don't like Pokimane because she puts on a fake persona and everybody
Okay.
can see through it.
And we hate the rich.
Aren't you the rich?
No!
If they're just having like restock issues about
Well,
it,
they would say that they're having restock issues. Having restock issues is an advertisement because it's saying that our food is so good that we sold out of it. Maybe
but
restructuring.
they're just going to
What
decide
is-
late October.
So the cookie business that is selling overpriced Oreos didn't actually do very well. Not only that, the CEO and co-founder, along with Pokimane, was just hired as COO for
$6 million.
On the 8th. Minus Snacks is dead. Wow! Selling overpriced shitty cookies doesn't make a good business model.
Like, oh my god, $28 for cookies? It's 4 bags. That's $7 a bag. I know, math is hard when you're an idiot, but like if you're a broke boy, just say so.
I guess there were, in fact, too many broke boys.
Okay.
Ego, let's say. What I'm referring to here more is, I think it's that book about
Hi everyone,
habits.
thanks for tuning in. Today's video is going to be pretty raw. I'm just going to get right to the point. Prop firms are holding you back. They are making you fail as a trader, literally, and they are completely distorting the reality of what it means to be a trader, profiting in the financial markets. Now, this is coming from someone who's actually made a lot of money with prop firms. I'm not saying there's not opportunity there, but the fact of the matter is they all have malicious intent, and it only seems to be getting worse, which is what's prompted me to make this video. Now, I'm not just talking out of my ass here. I have friends in the industry. I know the inner workings of a lot of these prop firms, and I'm just sick and tired of seeing how they operate. So I'm going to expose some things today. I'm going to talk about my experience as well, and hopefully I shift somebody's mindset away from prop firms and towards a real solution, which I'm going to provide in this video as well. And no, it's not a paid solution. It's not a boot camp or some course or some shit like that. I'm just going to tell you what the solution is and just hope that somebody implements it. So I'm actually just out running some errands right now. I'm going to pull over and give you guys a talk. I've been doing this for a long time. I've been trading for over 7 years now. And that means I was trading at a time where prop firms weren't really popular. They weren't really a thing. They were just getting started, but nobody trusted them. Mostly because they were just so new, but also they seemed too good to be true. So what myself and other traders around that time did was open personal brokerage accounts and fund those accounts with our own money. That's kind of how it's always been. That's like normal trading. We didn't just spend a few $100s and have access to a $100,000 or $200,000 fake account. And so that meant when we lose money, it was actually our money to lose. We had skin in the game. And because of that harsh reality, we didn't just gamble away the dollars in our accounts. We had to be smart about it. We had to take good trades and we had to compound those balances until it was actually something meaningful. We didn't get to just start over and buy a new account. Back then, the way I funded my account was through the profits of my company. I had a residential carpentry business at the time. I was a carpenter for about 10 years and I did residential trim work. And so I would funnel a lot of that money into my trading accounts as I was learning and growing as a trader. And honestly, looking at the trading space now, at least from the perspective of social media like YouTube and Instagram and whatnot, the real successful traders who have been around for a long time, they all kind of started in that era before prop firms were a thing, and they all became really successful by actually using their own money and funding and compounding their own accounts. I can honestly only think of one trader who's been wildly successful with prop firms. I'm not going to name names, but I've met the guy. He's a great guy, and his skills as a trader are insane. But the reality is, he's like 0.0000001% of traders in the entire world. All of you guys watching this, you're not going to achieve those kinds of results. If you do, it would be a miracle few others like him are an extremely rare breed. I'd like to explain some of the reasons why prop firms are making you fail as a trader. Number one, they're giving you unrealistic expectations. I think everybody knows this deep down, but it's not realistic to make 10% profit every month. I mean, this should be obvious. The biggest hedge funds and investors in the world are happy with like 7 to 10% annually. To expect that consistently on a monthly basis is just absurd. Now, it's possible, it's certainly possible, but it is difficult. And to kind of piggyback on that point, prop firms have also instilled this false sense of reality into traders that it's normal to be withdrawing every single month. I haven't met a single profitable trader who withdraws from their trading account every single month. The majority of traders are withdrawing on a quarterly or bi-quarterly or annual basis. And the reason for that is actually quite simple. Not every month is going to be profitable. So how can you expect to do consistent monthly withdrawals? One month you could be break even, the next month you could be losing, the next month you could make up for those 2 bad months, and then the month after that you could make significant profit that sets the standard.
I know. This is a really.
If you expect to be withdrawing on a monthly basis, you're setting this false expectation for yourself, and when you don't meet that expectation, you're going to feel like a failed trader, when in reality, you're trying to accomplish one of the hardest things in the world. Now, another way that prop firms are ruining you as a trader is with the ridiculous rules that they implement. Not only this, but they seem to change those rules every other week. So it's nearly impossible to keep up with these firms. Even if you are a disciplined, safe trader, you still somehow violate these rules. So the way that these firms, the way that the challenge phases, and even the live funded account phases are structured is literally designed to make you feel like a failure. You could spend 2 months of your life passing a phase 1 and phase 2 of a prop firm challenge account, finally get funded, and then make one simple mistake, break one of their rules, and lose everything. And then all of a sudden, you feel like the last 2 or 3 months of your life were just completely wasted. All that mental effort, all that mental energy that you put towards passing that challenge and finally getting funded after
Which
all
is
this
annoying
time,
because if you
just
use
completely
real money,
wasted. Now, I've been through this many, many times because I've been trading with prop firms for a long time. I've always treated them as like a secondary thing because I've always had my personal capital as well. But honestly, that doesn't make it any less frustrating. Like, I've been funded so many times and lost that funding due to the prop firm shutting down. That's happened to me like 4 times now, I think. Like, I only go for 200K challenges too, so this is not small amounts of money to purchase these challenges. It's like a couple $1,000s Canadian every time. And then I'll pass phase 1, pass phase 2, get funded, start working up some profit, and then the prop firm goes under. That happened multiple times to me over the past few years. And that brings me to my most recent experience with prop firms. Many of you know, just a short while ago, there was like this CME outage, and it caused huge spikes in multiple different markets. One of them being gold, which is what I predominantly trade. So I had a limit order set on gold with a prop firm. I'm not even going to name names. That's not the point of this video. But I had a limit order set, only risking 1% of my capital. It was a very modest trade. The stop loss was set in place. The take profit was set in place. The entry was there. And while I was sleeping, this massive disruption in the market occurred. And instead of a $2,000 loss, which would have been 1% of my $200,000 account, I instead received a negative $15,000 loss. Now, I know that these prop firms don't actually control the market. I know that that was an unforeseen event and it's not their fault. However, how they handle this situation is entirely their fault. Now, one of the interesting things is that aside from my live funded 200K account with this firm, I also was simultaneously running a $200,000 challenge with the same firm. So 200,000 funded, 200,000 in the challenge phase. The challenge account didn't experience a loss at all. For some reason, the trade was just eliminated. Yet on my live account, the one that matters, I had a $15,000 loss, which obviously violated the daily drawdown limitations for this firm, and I lost the entire account. I reached out to them multiple times, trying to calmly explain the situation and expressing my frustration for how unfair it was because they were not willing to reinstate the account. Now, a challenge account, I understand if that were to be failed, like, they get the fee, whatever, that's obviously beneficial for them. The more people that fail, the more money they get. But a live funded account, to just reinstate it wouldn't have cost them anything. And maybe I sound bitter when I'm describing this, but I mean, at the end of the day, I don't need that account. I don't need the money that I would have generated from that account. It's a small drop in the ocean, but it's more so the principle of it that really frustrates me. Because while this $15,000 loss occurred on this one firm, I also have multiple other accounts with different prop firms. And each one of them experienced completely different results from this CME outage. And of course, all my live accounts, like my personal funds, completely fine. No issues there whatsoever. So some of these prop firms in just a short period of time, literally within minutes, made millions and millions and millions of dollars. And they didn't make it right by anybody. And to be honest, this was like the straw that broke the camel's back because I've just been through so many issues with prop firms over the years. Like I said, firms shutting down, me losing my funding for reasons that were no fault of my own. And this is just another one. It's not like I was risking an insane amount of money. I was literally doing 1% of my account. It was even the swing style account with lower leverage and the ability to trade through news events and hold through weekends and stuff like that. And they still just absolutely screwed me on it. But this isn't a pity party. Don't feel sorry for me because I could care less about that account. Doesn't make a difference in my life. What frustrates me really, other than the principle of things, is seeing how many other traders were affected by this. And not just this event, but all the things that have happened over the years. Seeing how many traders, especially beginners who are just getting their feet in the water when it comes to the trading space, seeing them get absolutely screwed and discouraged from trading altogether is very frustrating. And it sucks. It just sucks. Now, I promise you, I'm going to present you with a solution by the end of this video, so stay tuned for that. But I wanted to touch on a couple more things. I mentioned at the beginning of this video, I have some friends in the space, a couple friends in particular who have started their own prop firms. And as usual, I'm not going to name names, but one of my good friends who started a prop firm decided to shut down that prop firm. And he was telling me the reasoning behind that decision. And he basically said after spending some time running the business and getting to know the space a bit more, he realized the only way to succeed was to be immoral. The only way to truly be prosperous in that business is to screw other people. And he said he had to close it down because he couldn't feel good about doing that. In order for the business to be truly successful, he had to come up with reasons to not pay out profitable traders. He had to only pay the small payouts from traders who just got lucky. He had to find a reason to violate and ban people that were truly successful, skilled traders. And so he straight up said, I can't do it, bro. So he shut down the entire business, which I really respect. But it just goes to show, like, a lot of these other prop firms who have been around for years, some over a decade, the majority of their money obviously comes from challenge fees and failed traders. You steal from Peter to pay Paul. That's how the payouts are made. The vast majority of these firms are not A-booking traders. They're not using their data to place their own positions in the market. They're just banking off of your challenge fees. And with the rate of how many people fail challenges, they're able to take those fees and pay out some traders, just enough to keep the operations running, just enough to make their business seem legitimate. But in reality, it's a very predatory business, and it is not moral. Now, I know what a lot of you are thinking right now. You're probably resonating with a lot of the things that I'm saying, and deep down, I'm sure you knew most of this to be true anyways, but the problem remains that you think you can't fund your own account because you don't have enough money to do so. You think that paying a couple $100s to gain access to 6 figures of simulated money is somehow better than slowly growing your own account over time. And I completely understand that. I get it. It's very appealing to think you're a multi-6-figure trader and you have access to all of this capital. But the reality is it is simulated funds. You're trading demo accounts. It's not real. And with the very strict limitations that they give you, you're not actually trading a $100,000 account. It's much, much less than that. So my point is, it's a myth. If people did it before prop firms, then they can still certainly do it now. Even if you only have a few $100s to your name and you don't have a very high income, there is still a way to do it. It just requires more patience. But in the end, it's going to make you more successful. So I'm going to just run to the store, run some errands. I've been sitting in this car for too long, but I will come back and give you all a real solution to this. And then I'm going to actually demonstrate it for you as well when I get back home to my office. And I honestly think by the end of this video, you're going to completely shift your mindset and finally get out of this endless loop of failing challenges and spending your hard-earned money on new challenges. You're finally going to break out of that and start doing what real traders do. Because I've said it before and I'll say it again, prop firm trading is not real trading. But on the bright side, their bullshit rules have probably toughened you up so much by now. Your skin is probably so thick that when you start actually trading, it's going to be a lot easier. Stick around to the end of the video. I'm going to show you what I'm talking about. Just running around doing some Christmas shopping. Had to stop at Starbucks. I'm usually not a fan of Starbucks, but caramel brulee latte, come on. Oh my God. So listen, I said I would give you a solution to the issues I was talking about earlier. Well, here it is. It's a very simple 2-step solution. Step 1, open a personal brokerage account. Step 2, compound it over time. Very straightforward, right? But unfortunately, the majority of you are not going to have the patience to do it. You might not be convinced yet, but I promise you when I get back home and I show you this demonstration of how even a small balance can compound significantly over time, I think you're going to get what I'm trying to say. But seriously, guys, it's not normal to expect to make withdrawals every month. It's totally fine to just leave profit in the account and let it compound. Obviously, you have to pay yourself every once in a while, but the thing is, trading should not be your main source of income unless you have such substantial capital that you can actually sustain your lifestyle from trading alone. But very few can do that. Even I'm not at a level where I'm comfortable doing that just yet. I think I would need to be trading with like $7 living off of trading income. And I'm not there yet. Prop firms have this weird way of conditioning you to think that you can be a full-time trader making monthly withdrawals, getting these monthly payouts. You can quit your job and live this dream life. It's just not that simple. The money I make from trading, years ago, I couldn't even fathom this. And still, I'm not fully comfortable just trading. I have multiple sources of income, from being a content creator to having affiliate income to having an online business. All of that on top of trading, it's wonderful. And honestly, there are days where I wish I didn't sell my carpentry business, and I wish I was still doing that. I think it's always kind of going to be a part of me because I love working with my hands and building shit. But also, you're a better trader when you're doing other things. Like when you're not hyper focused on the charts and what's going on a daily basis, your results tend to be a lot better and more consistent because you're not micromanaging things. But anyways, I digress. I want you to treat your trading account like an investment portfolio. Say, for example, you're dollar cost averaging into the S&P 500 over the course of multiple years or multiple decades, ideally. You're not going to be on the S&P 500 chart every day, micromanaging the small, minute movements. No, you're going to leave it there. You're going to let your money grow over time, and someday it'll all pay off. So trading isn't that extreme. You don't need to leave it in your account for decades. Obviously, we want to get paid and withdraw profits from our efforts in the market. But if you adopt that investor mentality, you'll look at things a lot differently. Let's say, for example, you're risking 1% per trade and you have a $10,000 balance. You could make 10% in a month, and that's only $1,000 profit. And then if you withdraw that $1,000, then you're back at square one. You're back at $10,000. You have to make another 10% every month, basically, if you want to withdraw that $1,000 consistently. That's obviously unrealistic. And to be quite honest, $10,000 is nothing when it comes to trading. But if you leave that $10,000 in there, make that 10% one month, for example, and then another 5% the next month, then 2% the next month, maybe you have a break-even month after that or a losing month. But each one of those months, you're depositing, for example, another $200 or $300 on top of your initial balance while compounding trading profits into that. My goodness, guys, in a few months, in a few years, you're going to have an account that can sustain your lifestyle. It seems daunting at first, but it's really not. This is how I started, and this is how so many other people that have been trading as long as I have started, back before prop firms were popular. We would funnel our own money into our trading accounts, trade profitably, hopefully, and as those profits compounded, we would also add more deposits on top of it until it became a substantial enough balance that we could comfortably make withdrawals from. That's how it goes. Now, I've had this long-term mindset for quite some time, but even more so recently because I stepped away from manually executing trades and I've been relying on algo trading. The less I look at the charts, the less I look at the day-to-day performance of this EA, the less I actually think about it, the more peaceful my life is. I have less stress. I'm thinking about long-term goals. I'm thinking about other things that I want to do with my day, like just playing guitar all day, for example, or making content. I do enjoy making content sometimes too. And I have the freedom to focus on all of these things because I'm just letting the EA do its job. Anyways, I'm going to pop into this last store here, and then I'll head home, get into my office, and I'm going to show you guys a life-changing, mind-altering demonstration of how compounding really works. Stay tuned. You're not going to want to miss it. You know, it occurred to me as I'm driving home, I don't really give you guys many call to actions. What kind of YouTuber am I? Anyways, if you're liking the video so far, if you're resonating with anything that I'm saying, make sure to hit the subscribe. But don't be shy. Guys, I just pulled into my garage, and look what is outside. Crazy timing because I was just talking about this. Well, well, well. Let's go inside and unpack this. This is so cool, man. I don't know where to put it. Gotta find a place for it in my office, but beyond grateful. Thank you so much, guys. Now, on to the demonstration that I promised you. I'm going to do a demonstration of compounding. I'm going to set up a simulation with a $10,000 account balance, and I'm going to run a test with my algo through all of 2025. And I think I'll set it up at 2% risk. I think that's a safe amount. Obviously, 1% is safer, but when it comes to personal capital, 2% is extremely conservative. Obviously, if you're trading a prop firm account, you don't want to be using very high risk because they give you such a strict, small limitation to actually trade with. But when it comes to personal capital, there's obviously no restrictions, nothing holding you back. So if your system allows for it in terms of your win rate and risk to reward ratio and all of your other statistics, then by all means, you can risk more than 1%. Anywhere between 1 and 5% is good, but 2% is a good, healthy number to stick to. So let me go ahead and set that up, and then we'll start the demonstration. All right, the demonstration has commenced. Now let's wait for the results. So as you can see, we're starting at a $10,000 balance. Very minimal, very achievable. Maybe to some of you it seems like a big balance. Obviously, you don't have to deposit that right away into a personal account, but you could start small and just compound it over time. Now, this is an algo, obviously. The same principles here go for manual trading as well, but this is just an easier way to actually demonstrate my point. So this is running from the beginning of January 2025 all the way to November 30th, 2025. So obviously with the exception of December, because at the time of recording that has not happened yet. And the EA that I'm using here is a breakout EA. It sets key levels on a daily basis at certain areas in price. This test is currently running on gold on the 1 minute time frame. We also apply this to the Dow Jones and the NASDAQ. Works beautifully on all three, especially all three together. And we see an average of a few trades per day, which is really nice. It's got a very high win rate and I've been absolutely loving it. But the thing is, it takes some time to actually produce results. You can't just be expecting weekly withdrawals or, bi-weekly payouts or something like that. There are some months where it's perfect far and we're only up 7%. Obviously, that's not too impressive. You divide 7 by 2 months, it's 3.5% per month, and a lot of people wouldn't be happy with that. However, in reality, that's phenomenal. But we're just getting started with this demonstration. Okay, so I'm going to check back in maybe halfway through 2025, and I'll show you guys the update then because, 8% now. As this continues to compound at 2% risk without withdrawing any money, these numbers will grow significantly, and it's going to really open your eyes. Now, just a little bit of context on the strategy here itself. This EA places 4 orders per day per asset. So 4 key levels, 2 buys and 2 sells every single day, and it's betting on momentum, a breakout of these key levels. And once that breakout occurs, we have a very strict stop loss management system, which allows us to take partial profits and protect ourselves from a full stop loss. So this is only applied to gold right now, as you can see. We also usually apply this to NASDAQ and the Dow Jones US 30. So
hey everyone, welcome back to the Mental Edge Trading Psychology Podcast. I'm Sarah, a former therapist turned trader, and today we are starting a 3-part series on funded trading. The first part this week is about why getting funded is so hard. Next week is going to be all about how to stay funded long term, and part 3 is about getting your payout and keeping your accounts long term, because the number one time you are going to blow your account is right before or right after getting a payout. So how do we achieve that payout, and how do we keep the account so we can keep getting payouts continuously? Okay, if you got my newsletter this week, you already know some of this already, but we're going to go way deeper today. I'm going to walk you through exactly what's happening in your brain during a challenge, the specific moments you lose control, and what to actually do about it.
Fucking breathe, woman. Jesus.
So I hear this all the time. Sarah, I can trade my demo account just fine. I can trade my personal account, but
Today is a very big day in the prop firm world, because for the first time, you're going to hear directly from the leadership of a brand new prop firm that is fundamentally changing how prop trading works. I am honored to be the exclusive trader who is announcing the launch of Tenacity Trading, a first of its kind, competition-based prop firm that actually puts traders first. And I don't say that lightly.
Competition-based.
Are built on restrictive rules, slow payouts, and business models that...
That's interesting. Pay an entry fee, and the top trader gets the prize. Now that's actually an interesting model.
Quietly profit when traders fail. And Tenacity is flipping that entire model on its head. And here's why that matters. At launch, Tenacity is offering something that is unheard of in this industry. A $50K straight to funded account for only $100 launch price. Only 5 trading days to pay out. No consistency rule. And lastly, one of the fastest paths to live that I've ever seen. This is not just marketing fluff. This is a structural change. So in this interview, I sit down for the very first time with Jared Postal, the CEO and founder of Tenacity Trading, for the first public, long-form conversation about how this firm actually works, why it was built, and exactly how traders are meant to win inside this prop firm model. In this conversation, we're going to openly talk about why the traditional prop firm model is broken. How competition-based funding is going to align incentives correctly.
Interesting.
Exactly what traders need to know before they jump in, and how Tenacity plans to scale without sacrificing trader success. So if you're a trader who's tired of passing prop firm evaluations just to get throttled, if you want faster payouts and fewer artificial rules, or if you're here simply searching for what's next in prop firm trading, this interview is going to be required viewing. Tenacity Trading officially launches January 1st, and this is the earliest, most transparent look that you're going to get. So let's get into the interview. All right, everybody, really excited for today's interview.
Yeah, we knew that was coming.
Barney is a dinosaur that comes from our imagination. This is what we're told in the intro for every episode of Barney.
Barney is a dinosaur from our imagination.
He is just a normal plush toy dinosaur that a group of kids imagine as this big, talking, magical creature that takes them on crazy, make-believe adventures and teaches them life lessons along the way, before turning back into a toy and giving us one final wink at the end of every episode. It's a very wholesome part of our collective childhood. But of course, if I'm talking about it, then you know that I have once again started to overthink a show that was made for little babies. And that's because there's another line in the intro of this show that's always kind of bothered me. But Mom has never seen him because she doesn't know our secret. What exactly does this mean? What secret? Well, if you look back at the early episodes of Barney and the Backyard Gang, you'll see that Barney's existence was actually a massive secret that the kids kept from their parents.
Would you all like to go right now? Your mom will hear us.
Tina!
And just in time, your mom's coming. Gotta go.
Barney! Mommy's coming!
And they never explain why. They even go as far as to physically hide Barney when parents come into the room. Which is strange, because
He's in the
Barney
imagination.
is just an imaginary friend like we've been told, then why bother hiding him? And it's not like the fact that they have an imaginary dinosaur friend is the secret, because the kids are more than willing to tell their parents about Barney.
Who are you talking to? Oh, just one of our make-believe friends. We call him Barney. He's not a dinosaur. Well, Barney must be a very good friend.
So, what exactly is this secret that they're keeping from their parents? Why do they need to physically hide Barney? What do these kids think will happen if their parents see their imaginary friend? Well, this all takes on a whole new meaning when we look at the episode A Day at the Beach with Barney. In this episode, the kids want to go to the beach, but Michael and Amy's dad is busy working, so they can't.
That was Daddy on the phone, and he's got to work this weekend, so we're not going to be able to go to the beach.
So instead, they use their imagination to make Barney show up, and he takes them on a fun imaginary beach adventure for the day.
Close your eyes and pretend real hard, and I'll take you on a make-believe trip to the beach.
But there's something that happens at the end of this episode, after the kids return home, that will forever change the way you view Barney.
Is it there? It ain't make believe.
Where did they get the sand?
The kids brought back a bucket full of sand. They actually did go to the beach. This
actually
not
happened.
imaginary. He is real. And the implications of this are kind of disturbing. There is a large dinosaur man who regularly visits these kids and takes them away from their homes without their parents' knowledge or consent, and he's convinced them to lie to their parents about him and physically hide him inside of their home, because obviously any parent would be horrified if they came across this massive intruder who routinely kidnaps their children.
Would you all like to go right now? Your mom will hear us.
I mean, just look at how confused and disturbed they are by this bucket of sand. This is not an implication that I am making up. This is something that the show kind of directly tells us.
Kind of.
Barney later has a song about stranger danger that is just so hypocritical and hilarious in retrospect.
Never talk to strangers. That's very good.
Yeah. I need a man after midnight.
Don't talk to strangers, unless it's me, Barney. In that case, it's fine. Don't tell your parents about me. You can get inside of my Barney mobile. That's totally fine. That's different. Literally, the logo for Barney and Friends is a silhouette of Barney leading a bunch of children away from their homes. This is so weird and creepy once you realize that Barney is a secret that they kept from the parents.
Your mom will hear us.
And we've only scratched the surface of what's really going on with this
This is crazy.
dinosaur. So stick with me, because together we're going to truly uncover Barney's secret.
I never liked Barney anyway. Alright, buddy. Still nothing. Is this set up? Is this got... No, it doesn't. Okay, so this one needs an alert on it. What a boring day. What a boring day.
After a quick word from our sponsor.
Oh no, I've been in a car accident again. I should call my lawyer.
I'm John Morgan of Morgan & Morgan.
Hi, John Morgan of Morgan & Morgan. It's Alex Bale of YouTube. Morgan and Morgan.
Are we still going? Alright.
So, what exactly is Barney? Because yes, he does seem to have a real physical effect on the world, but he's also just an ordinary looking toy that only
It sounds like fucking Freddy Krueger or something.
comes to life if the children imagine him. So, how is Barney both real and imaginary? Well, the intro of the show never actually says that Barney is an imaginary dinosaur. It specifically uses the words, a dinosaur
From our imagination.
As in, Barney is a real dinosaur that can interact with the world and be seen by anyone, but he can only be manifested from the power of children's imaginations. It's like he's some kind of supernatural mental parasite that feeds off of
Freddy Krueger. I called it.
from the SCP Foundation. Okay, but then what does Barney want? Why is he secretly taking these kids on these adventures and teaching them things? Well, the main thing that Barney asks these children to do in pretty much every episode is to use their imagination.
Use your imagination.
Use our imaginations.
Which makes sense, because as we know, Barney needs imagination to exist. But something really interesting starts to happen as the series progresses and more kids start to believe in Barney.
What? Who are you? This is our friend Barney. He's a dinosaur, and he loves kids.
Hi, Derek. I'm glad to meet you.
We're all members of Barney's Backyard Gang, and we'd like you to be a member too.
By episode 4 and 5 of the original series, after Barney has already been introduced to a few new kids, he suddenly gains the ability to magically bring children from their homes to him completely on his own without any warning.
Let me get the rest of the backyard gang here before I explain. I'll bring them all over. Hi, everybody.
And this is something that the kids even acknowledge is weird and different. almost like Barney became more powerful because of the increase in children who believed in him. In episode 5, we also see Tina, a new neighborhood friend, now has her own Barney doll that she can use to summon Barney whenever she wants.
Thank you, Mommy. I can't go to sleep without Barney.
You're right. Barney is special.
And we know it's a new one because it has a slightly different design, and the intro still says that the original Barney doll still lives with Michael and Amy.
Barney lives with Michael and with Amy.
It's clear that Barney's influence and power is growing, and it continues to grow every time they introduce Barney to more and more susceptible children. And this all culminates into the point of no return for this franchise: Barney's first ever live musical concert. This is when Barney spreads from just a couple backyard friends into a massive sensation, with tons of new children and even parents now believing in him. It seems by this point, Barney has become so powerful that his existence being known by parents is no longer an issue. Now he is simply an unstoppable force that no one can deny. And also, we know this concert episode is canon to the lore of the Barney TV show because the kids later mention it in future episodes.
Hey, let's do that song we did in our concert.
This concert represents the moment when Barney's influence reaches a completely new level. We see tons of children, all with their own Barney dolls that they will later bring back to their homes to continue spreading this infection. And it should be no surprise that this concert...
This is crazy shit. Alright, brother. Oh, where did that Indian guy go that I was watching earlier?
Today I have with us Jared Postal.
No, that's not it. Postal? Jared Postal. Isn't that the name of Postal Guy? Jared? Or is he just Postal Guy?
Long video, because as we move from day one with the most basic learning lessons and beginner mistakes all the way to the crucial breakthroughs that changed everything for me and might do the same for you, all of it was documented live on this channel starting in 2022. And I intend on this being my most helpful contribution ever to aspiring traders, demonstrating the realistic progression of learning, where I went right and wrong, and so much more that I can use to help you, regardless of your experience level and regardless of how you trade. As of the date of this video and going back to 2024, I've withdrawn 24 payouts from different prop firm funded accounts totaling $25,191. And I'm currently up over $5,000 across 4 funded accounts that are all eligible for payouts. I am not a full-time trader. I have never sold a course, and my guides will always be 100% free. I've broken everything into chapters you can see in the video description.
You're back, are you? How's things, buddy? Fucking slow day, man.
Marked by major phases and natural stopping points to reflect and cover any highlights. For example, the upcoming chapter covers months of pure beginner experimentation and learning. I was trading all day and saying my thoughts out loud about various ideas, price action, and the trades I was taking, all while recording everything in order to document and analyze it later, as well as turning all of these into videos that got uploaded on this channel. If you're not new to trading, then you might want to skip that part and move ahead to when I created my first draft of a trading strategy. And if you use prop firms like me, I'd love to have you join my free Discord server below just for prop traders. And I'mInTrading.org has all free guides, prop reviews, and more to help you. Now let's get started with the first phase of learning how to trade.
Today marks the first day of the rest of my life. I don't know what will happen next. If you can't handle the pressure, then don't watch it. So, I'll be back in a couple minutes. Alright, that's okay. Not all pullbacks are going to pull back. Sometimes it's going to pull and then keep pulling. I think I need to have a concrete idea of the exact price level that I want to get in. That'll remove some of the subjectivity of timing a pullback. Trades can be split into 2 categories. dynamic, where you're betting on it moving somewhere new, or stagnant, where you're betting on it staying relatively close to its average. So when you have take profits outside of the area where price is most of the time, aka around its line of best fit, and stop losses inside of that area, then that's a super low probability trade. The other thing I'm thinking about is the massive size of this daily candle. The longer it gets, the less likely it is to continue, which is logic that I use while trading on the smaller candles as well. These huge candles over here are statistical abnormalities. Most of the time, you have candles like these. Usually I eat half a bagel with peanut butter in the morning, and I didn't do that.
This is how shaky I am right now. I can't even keep the phone straight.
And you can really see how scared I am. I'm not following my rules of just not watching the trade. I'm not accepting the risk for what it is, because as we can see right now,
These are futures, I
I would
think.
have just made quite a bit of money there. So I'm going to stop watching it. Here's something interesting to think about. Me hesitating like that sort of implies that I think I know what's going to happen next. Hesitancy sort of implies some degree of skill.
Hesitancy implies skill. Hesitancy implies that you believe you have some skill, or that you have some knowledge and you're trying to. It can be different things, I think. Like, you could be hesitant because the hesitancy is created when you're unsure about something, right? You believe one thing or another, but something somewhere says actually, but nah. So you hold off on pulling the trigger. I suppose that's on the Dunning-Kruger scale, blind faith in the system, and then double guessing it, and then triple guessing it, and then I don't think I'm a hesitant trader myself, because I systemize before I start taking trades. No, so I test the system, and nah, bro, not yet. The spread's too big. Spread's still 6.2 up here. Can you see that? Yeah, so spread's 6.2, and I don't play until it's 1.2. 1.5 is my spread, and then I'll play. Anything bigger than that, and I don't touch it. Oh, that's the wrong one. It's this one. Okay. How's this doing? It is losing money and it's down 4 clicks. How is this down? Ah. It should be in pause because of the spread, right? See? Pause due to spread.
I don't have skill. So why would I be waiting, thinking about whether or not to take the trade, as long as that trade is within the guidelines I have for myself? If it's not a trade where it's like clear that I'm only taking it because of FOMO or something, then I may as well just take it, because pondering about it and thinking about it implies that I have some skill, and I don't. So take the trade, accept it for what it is, and if it doesn't work out, then we'll figure out what we learned from it. Not taking a trade doesn't really develop any skills. The tough part about that is now I'm thinking to myself, do I want to buy this and go long here because that's a trade I should take? Or do I want to buy here and go long because I'm thinking about what I missed out on when I failed to execute buying here? Isn't it funny how once price action has already happened, we can adjust a little line and make it look like this would have been easy to predict?
my brain wants to go long there because of how enthusiastically up it's
It should
looking,
be going
and
short.
those are the exact thought processes that cause me to be so wrong. It's weird. It's like you have to find the balance between contrarian thinking and still following the trend. For some reason, when I see that candle like that, it makes me think like, okay, here we're going, let's get on. But it always goes the other way when I do that. Now would be the time to get long because it's going down. And that's nice to see while I'm talking about it. This line is where I said I should get in when the red candle was going down. What my brain wanted to do was get in when it was up here. I don't know. I have to find the balance between inversing myself and identifying the thought processes that are causing me to mess up and then saying, no, we'd be up a lot of points right now, but that's okay. This isn't about money. This is about learning. I have a very, very long time horizon.
I really like this.
Crazy how much.
So what he's doing is, see, I'd have shorted there. I'd have shorted that probably, but I don't have all my information here. I've got markers on this stuff that looks for other stuff that he's not looking for. So just seeing that level build in like that, I'd have shorted. In this instance, I might have been wrong, but I am working on partial information as well. But I do like what he said about. So I'm saying I was wrong, but I have a reason why I would have been wrong, and that's because in this video he doesn't have all the tools up that I would to be looking at. So something that he said is quite interesting, and this is something that I've decided as well, right? Basically, time actually on the chart, and the best way to learn the chart isn't to just watch it, but to actually place the trades, see what happens. Like, it makes you more invested in what's going on and makes you more like, why did that happen? So actually, like, placing the trade and sitting it and watching and like going through the stress of it going against you and the stress of when it goes your way and it's like, oh, I don't want it to go back, I might lose money. Going through all that is valuable for two reasons. One, it teaches you emotional resilience. That's if you learn from it. And two, it teaches you to hyperanalyze your charts and whatever you're looking at and figure out whether you are actually looking at something that's valuable information that's giving you an edge, or if it's just random in your fucking all of your edges in your head.
The color of those candles can influence your emotions. I'm gonna chase this just to try and. Okay, never mind. That's the second time I've done that, and it's been stupid. God, all right. Okay, and this is why we have notes that I look at. Well, that I'm supposed to look at.
Timing a pullback is still trying to reverse. Yeah, he's so right. This trade is not important. That's this one here. The outcome of this trade is not tied to my self-worth. I don't have to give a reason to myself or to a viewer on why I'm taking a trade. I don't know about that. Don't get in when it has made the move. You gotta do it before. It's okay to guess. You don't know what you're doing, and that's okay. Just execute. Do not try to reverse timing pullbacks. Do not try to get in on a big move. Most of them don't continue. Do not overanalyze. Remember, every trade is independent. It's just a bunch of rectangles. Chill the fuck out. That's quite cool. I like that. You're scared of trading because it reminds you of when you had a gambling problem. Ooh. That will never happen again because you say it won't, therefore it won't. Yeah, he's very clever. It's okay to see a big profit turn into a little profit because how else would you get big wins? If you move the stop loss further, you have a gambling problem. Interesting take, right? So, he's not saying... Interesting take. I agree with that completely. So, what he's saying is that if you've got a price that's doing a thing... Do I have the chain here? Where's my drawing tool? Those are annotations. With the drawing tools. Where's the drawing tool? Where's the good one? Trendline tools. Retracement tools. Where's the pathing tool? Is it in here? Yeah, pathing tool. Okay. So what he's saying is, say you've got a trade that's done this, okay, and we're here, right? And then you draw a stop loss and you draw a take profit, right? So we make this one red just for the sake of the video. Where's my it's over there. Okay, so we make this one here red, pink, and we'll make this one green just for because it's pretty, right? So say you got this trade that's here right now, and you've put your stop loss at this level, and you've got your take profit at this level, just below the level, because it's more likely to touch it and go than it is to continue up into it and then go. Okay, so say I'm like, oh, maybe it'll get to like that candle there, whatever, doesn't matter, right? Now what he's saying is that if price does a thing and it starts doing this, right, and price is now here, if you take this and go, oh, maybe I'll move this to here, you are no longer trading, you are now gambling. And I like that take. And the reason I like that take, not very well formed, it's just instinctive, but you had a trade idea that said that this was your level for whatever reason, right? Now to change that, nothing has changed. Okay? There is no new information that has made you think, oh, maybe this level actually belongs here. It's just you're like, I'm losing and I want it to, like, if it touches that, I'm going to lose all my money, so I'll just move it away. No, that's fallacy thinking. If it touches that and you're out, then you're out. What I do, by the way, is I no longer place this stop loss here. Okay. I place this trade. And then if this is one up and this is one down and it catches both, I'm always at the same amount of win or loss no matter where price moves in the market. And then I wait for the next opportunity, whether it's that way or there. And I'll put this guy's take profit there. And then if it touches that and comes back, I'll close this guy, which is losing. But because this guy's moved from here to here and touched and closed, that's profit. And then if it pulls back, this one here starts has lost less and less and less and less until the balance between the amount of profit that I took and the amount of drawdown between this point and this point puts me in profit overall. And that's why when I put this take profit in, I will always make sure that this take profit is bigger than this gap. More specifically, I will make sure that this gap is smaller than my take profit range. So here's an example here, right? Here's my gap here, and then this is my one profit range to the next profit range. So if it was the other way around, like this one here, where they're fucking overlapping each other, literally overlapping each other, if it was like that, and this is my stop loss, and this is my profit, I wouldn't take that trade. I'd ignore it and I'd just go to the next fucking level. Let's put that back where it belongs. Okay. That's what it should always be about, probably. It should always be about probability. Yeah, maybe.
During the trade. And look at that thing go.
Yo.
Don't stop loss, Chase. All right, I just did 25 push-ups because that's healthier than sitting here being all nervous.
Oh, this dude. So this is him on day one, right? If this was him on day one, this guy has got to be making money now. He's so onto it.
Moving your stop loss to break even because you don't want to lose money or because what you think is going to happen no longer makes sense if it gets there. That is really painful. That's so funny. The one time I didn't move my stop loss. The one time. That's how it is, though, right? You want to give in to the emotions and do something stupid, or be smart and walk away. So I'm going to walk away. It's okay to guess. You don't know what you're doing, and that's okay. Just do it. I don't learn anything from just watching.
Yeah.
Some skin in the game, you know? You'll
Yeah.
definitely get stopped out if you enter a position in the middle of consolidation. Got to get in at one of the ends, otherwise you're asking too much of price, especially.
This goes back to something else that he said, where he said, if price is trading in a range and you put your stop loss in that range and you take profit outside that range, that's a high probability that you're going to lose that trade. Because it's just going to keep doing. It's going to hit this before it goes up here, probably. That's what he's on about. And so he's just saying the exact same thing here about rephrasing it.
If your target's in a new area. All right, here's some more thoughts on the whole stop loss moving thing. Moving your stop loss to break even while you're in a trade often is done to avoid the pain of having a winning trade become a losing trade. But here are my thoughts. As a beginner, I don't know what I'm doing. So right now, capital preservation is more important. Who knows? Tomorrow I might say the opposite thing. And that's because these are just genuine thoughts. I'm not going off a script, so I'm not having time to think about it. I think we're seeing the Stegosaurus pattern. Volatility has picked up quite a bit. Gotta change the targets when volatility changes.
Thanks for watching, everybody. And don't forget to subscribe.
If everyone else thinks it would happen too based on beginner knowledge, of course it's not going to work. If it did work, none of us would be called beginners. Oh, that stop loss. So far that is hurting me, and not helping me. I'm gonna be brave enough to only put that 0.75 in.
Mm-hmm.
Well, I just missed out on 9 points because I wanted to be brave. Ouch. Tight stops are okay, but they have to make sense. Don't put it too far past a pivot. Put it at a point where you think it'll keep going that way if it goes that far. On some of your trades, you decided to be brave and put a bigger stop, but that didn't really make sense. They were far away, but they were put in areas where a couple points before that would have invalidated your trade idea. So keep them tighter, and maybe try to target a little beyond a 1-to-1 ratio. Even risking 2 points for 3.5 points skews the math very heavily in your favor. Be greedy, but not too greedy. Remember the 9-point trade next time you're at a low of day or a high of day, which is when I failed to follow my rule of stop-loss chasing an in-profit trade when price action got close to breaking a high of day. Because of this, a 9-point trade became a 2-tick trade, making $1 instead of $45. Sometimes price does just keep going, and you don't need to wait for a pullback. If you're not waiting for a pullback, then you better keep a tight stop and trail that profit. Take lots of trades, because you don't really learn anything from just watching it. Your brain filters out the pretend trades and skews them in your favor, making you think you were right more often than you really were.
That's great.
The first interruption to cover the good.
That's great, actually. That is fucking great advice. Don't look at it and go, oh, I could have taken that trade. I could have taken that trade. Take the fucking trade and then learn from it. It's good advice.
Good, the bad, and how it can help you. Feel free to skip through any sections. Everything is timestamped. At this point, moving the stop loss in rather than letting a trade play out was an enormous struggle due to the anxiety about losing trades and money. Because for some idiotic reason, I was using a live account on some trades instead of doing it all on a sim account. I was even so nervous that it was making me shake, even though it was like a $20 trade. That's crazy, but it demonstrates the amount of time and experience it takes to become desensitized to the intensity and fear of trading with your own money on the line. Either way, there is zero benefit to not using a sim account when you're new, and this was stupid of me. So, when I moved the stop, it prevented larger profits, and when I finally built up the courage to not move it, winning positions were turned into nothing. Quite painful at the time. In retrospect, I lost out on some progress by not just leaving the stop where it was no matter what. Because properly doing that while in a trade requires a lot of experience that a beginner just doesn't have. Another benefit to not moving a stop no matter what is that it removes some ambiguity and nervousness. Rather than there being pressure and anxiety about what you should do while the trade is happening, you just accept the target and risk for what it is, initiate the position, see what happens, and extract the lessons later. When you're new, and sometimes even if you do have quite a bit of experience, moving the stop is entirely due to anxiety, not
See this? He's changed the colors to white and white. He's taken the red and green out of it.
because of objective probabilities or...
My candles are custom as well. They show a sentiment. They aren't actually the actual candles. They're actually a sentiment candle that I built. And see, they're cooler colors too, like they're less stressful colors. Red and green are stressful colors, dude. So, I prefer these warmer colors, the orange and the blue. They're just softer, you know. The red is a red zone for no trading because the spreads go crazy. See, the spread's back down to 1.2. So my trades started up again on my bots. Sort of. Yeah. That one's trading anyway. So. Anyway. So price did get down to here, but because the spread was all fucking funky and shit, I didn't get the touch. It didn't count, but I'm just going to ignore it and pretend it never happened because the spread was funky as fuck, and I'm not doing funky as fuck with spread. I'm just not doing it. I are not doing it. This is... Is it? Let's check this. I need to go back one more to get that check in, right? Oh yeah, okay, that's valid. So maybe I should just keep an eye on this level. I'll leave this at 4 at the moment because that's actually the right point for that zone. So price is about to get interesting. There is an alert on that, and there is an alert on that. So I don't have to do anything until something goes beep. Basically, I'm doing nothing until something goes beep. Like, I could put that there. It's actually a really, really likely place. I actually might put it at the top. Yeah, that's positive, so I'll put it at the top. But if it hits that point, it's already more likely to keep going. Maybe I've thought about this before. So I won't touch it, and I'll wait for it to move, and when it gets there, I'll let it tell me what's going on when it gets there. Until then,
of a real trading strategy telling you it should be moved because a certain criteria was hit. Remember, I was in the middle of a giant experiment to create my own system. So, all kinds of trades are being taken, and then meaningful lessons are being extracted. Instead of starting with something like supply and demand or support and resistance, it's just me, a blank chart, and trying to find behavior characteristics about price action itself. For example, in this first week, I learned that if you think a pullback in a trend is indeed a pullback rather than a total reversal, you also have to get the timing right with the correct size stop loss. Maybe it will go back up, but that doesn't matter if the stop loss is too small or if you enter too soon or too late. So it's not enough to be right. You also need to get the timing of your guess correct, and the stop loss needs to be in a spot that gives it enough room to move. The approach is pure experimentation on every variable, slowly grabbing ideas and concepts to build the initial foundations of what I'll eventually hone in my focus on. Hopefully that visual makes sense now. At this point, I was trying to find the most fundamental and objective truths that could be used to help with trades. Not up to interpretation, just the most simple forms of logic. With that came things like thinking about the size of candles. The longer it gets, the less likely it is to continue, because that makes it an outlier, and outliers are, well, outliers. Unusual, rare, unlikely to happen. The next candle might continue in that direction, but it's a true observation when looking at one candle as an isolated event. These types of thoughts and facts that I wanted to establish were just about making sure I was starting on the right building blocks. The strategy would come later, but the work I was doing now was just about establishing the most basic truths. That's why I also began observing what would later become the basis of my entire strategy years later, which was that trades could only ever be two categories: expecting price to continue where it's been, or to go to a new area. One mistake I made was in using terms like never and always. Like when I said these faster momentum candles I kept following always reversed after I got in. Things are rarely always or never true in trading. It's just too nuanced of an endeavor to immediately put a specific topic into a box as a beginner. Saying price action always or never does blah 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 is bad, most of the time. You risk harming progress by having errors or misconceptions in the fundamental building blocks on which your future strategy will be based. That just means you should always be open to the possibility that your ideas and notes might not be 100% true. You have to fully commit to the fact that a beginner is learning and that the learning will occasionally take the wrong turn. Your awareness of this determines whether or not you turn back and continue down the right road. Plus, following a candle like that isn't actually a bad idea with the right context, meaning if price action is extremely directional on that day. When it's slower moving with a higher degree of consolidation, jumping in and following is why I kept getting stopped out. It was the lower probability trade for that specific type of price action, which I didn't know yet, and which we will cover later. Focusing on process over profits helped me maintain the right mindset, making everything I was doing about the lessons I was learning rather than the actual money made or lost. And again, no idea why I was occasionally using a real account instead of all on a sim account, because all of those lessons would have been learned regardless of if I made money or not. So remember, I'm experimenting. The actual recordings were anywhere from half an hour to multiple hours long. Those were turned into highlights for episodes, and this video is just
59
highlights of
gig.
those highlights. So this is as informationally dense as possible, and I'm going to cover a massive amount of topics. There will be more interruptions towards the beginning due to that being where most of the learning and idea exploration takes place. So, the bad. Definitive always or never statements using a live account and moving the stop loss around. The good, great observations about price action characteristics as well as the irrational thought patterns leading to poor trades. Now, that does not exactly mean that our thoughts themselves can be used to take profitable trades. It means that those particular thoughts happened to be the opposite of high probability price action characteristics in that particular moment. Meaning, on a day with slower moving choppy consolidation, a candle that quickly starts moving towards a new area is more often going to be reversed than it is to continue. That's why fault characteristics as well as the irrational thought patterns lead informationally dense as possible, and I'm going to cover a massive amount of topics. There will be more interruptions towards the beginning due to that being where most of the learning and idea exploration takes place. So, the bag. Definitive always or never statement. Always or never statements using a live account and moving the stop loss around. The good, great observations about price action characteristics as well as the irrational thought patterns leading to poor trades. Now, that does not exactly mean that our thoughts...
Why the fuck did you put your stop loss there? Your take profit there? What reason did the chart give you to put your take profit there? Do you know where your take profit should have been in this trade? Screenshot this, draw a line, send it to me. Screenshot this, draw a line, send it to me. Here's a learning moment for you. There are two places, maybe three, but there are two places that you could have put a good stop loss here. A good take profit, sorry. Yes. Yeah. Exactly. The safer version would have been at the bottom here. But yes. These four candles, well, is technically these two, have drawn a very clean line straight across there. And look, it touched it again, right? Why would you put it there? Because he's trying to catch a trend. The thing is, if you're trying to do that, you don't put a take profit in at all. You are banking on a trend. You let it trend until it tells you it's not trending anymore.
Cells can be used to take profitable trades, it means that those particular thoughts happened to be the opposite of high probability price action characteristics in...
He talks so fast. What's the button to go back 5 seconds on YouTube? Left arrow. Is it just?
In that particular moment, the opposite of high probability trades does not exactly mean that our thoughts themselves can be used to take profitable trades. It means that those particular thoughts happened to be the opposite of high probability price action characteristics in that particular moment to be used.
What the fuck? I've listened to this 3 times and missed it 3 times. Hang on.
To take profitable trades, it means that stop loss around. The good, great observations about price action characteristics as well as the irrational thought patterns leading to poor trades. Now, that does not exactly...
He put his stop loss here, which is a crazy place to put it. Because look how much action's been in here.
mean that our thoughts themselves can be used to take profitable trades, it means that those particular thoughts happened to be the opposite of high probability price action characteristics in that particular moment. Meaning, on a day with slower moving choppy consolidation, a candle that quickly starts moving towards a new area is more often going to be reversed than it is to continue. That's why following an outlier instead of reversing it led to extraordinarily negative results.
If price is chopping, it's probably going to keep chopping. So if you get an outlier that goes up extra high, you should reverse that, and you'll probably be more likely to go into profit, is what he's saying. So what he's saying is that if you, like, over the weekend here, Bitcoin, over the weekend, this is the weekend, okay? I made money on that and on that. I caught both of these. Look, I got that pixel fucking perfect based off this run up here. But the weekend was literally from there Saturday 5 a.m. It was 9 a.m. to there. That there was the weekend trading. Look how flat that is for Bitcoin. Bitcoin does this every weekend. And then, just so you know, if you get to this point here, which is Monday morning, right? If you draw a line like a box around the weekend, Saturday 9 a.m. to Monday 9 a.m., and then you put a fucking take profit here and a short here, I guarantee you'll get a spike and you'll catch money off it. I was testing this over the weekend. I went back 50 fucking weekends. And every single one of them, it flattens out over the weekend, and then you put a stop order at each side, and whichever side it goes, there's even this side here, there was a bit of a spike. It wasn't like a 1-to-1, but it was still a spike, right? This happens every weekend, and has happened every weekend on Bitcoin for the last year. But what he was saying is that because you've got this choppy, because it's choppy, it's more likely that when you get a big ass candle, it's just going to instantly reverse, right? And if I zoom in, here's your big ass candle that reversed. Here's a big ass candle that reversed. Here's a big ass candle that stayed choppy, and it did come back eventually, but not really, right? Here's a big ass candle that reversed. Here's a big ass candle that reversed. I'm looking for a big ass candle that didn't reverse, and so far I haven't found one. There. And then another big ass candle saying it's going to reverse twice. Boom, boom, it does. And then you get into the breakout zone. Oh, yeah, I solved Bitcoin ages ago. Wait. I didn't mean to move that. The other thing that Bitcoin does every fucking time is if you get a 3+ ATR move in a single candle, it will consolidate and then it will pull back. So if we go, yeah, look, there's your 3+ ATR. and then it consolidates, and then you get this huge pullback. Happens 100% of the time. The trick is being ready for it for when it does, right? Because if you start trying to grab the pullback here too early, it's not going to work. It works when you take the amount of volume on the last move. So you take the volume for this move here, which is like this guy. This is the volume, 74k. There's the move. So you go forward 74k, which is this bit. 74k is here. So you take the low of that, and then you put your stop under that. And you put your trade there. And then it's hit there, and blah, 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 blah. And then it comes back to the original level. Every fucking time. So here's your big ass fucking move. So you take the volume in that area before that move. There it is, the 63k. So you go here and you get to the top of this move here and you go 63k is there. And so there's the bottom. So at the point that it's hit that, you probably should have already been in the trade. And so you've measured out your 63k. It's here. You would take the trade here. You put this at the top of that range. You put this at the bottom of that range there. And yeah, you win that trade as well. Every time. Every single time. It usually happens on a Monday.
If I had done that on a directional price action.
Oh, that, by the way, is like $1,000. So, like, this pullback here is $1,000, right? So, so you can't do it with $1. Oh, maybe you could, but yeah, one lot is like $1,000 or something. Okay, $2,500 for your $1,500 loss. Yeah.
It would have worked great, but this is the context I didn't know at the time. And this is an important clarification to make, but this could result. That's why following an outlier instead of reversing it led to extraordinarily negative results. If I had done that on a directional price.
Okay, he just said something interesting here. Following an outlier, as in he's trying to find a range, and then he finds a breakout outlier in the range, and then thinks that that means there's going to be a breakout and it will keep going. But every time he takes that, it reverses on him. Right? Now, what he said is that if that happens, it's an extraordinary, that's the word he used, extraordinary negative win rate. Which means, if you reverse the logic, you should get an extraordinary win rate.
Action day, it would have worked great, but this is the context I didn't know at the time. And this is an important clarification to make and example to use when I say that I was monitoring my own thoughts. I know it sounds strange, but now you get it, and there will be more examples later. Let's continue.
Today, what I'm going to be focusing on the most is looking at my rules a few times an hour. Now I have an updated list. I'm going to make a new document each week because the problems we face are dynamic. They don't stay the same. Some of them go away, and sometimes we get new ones. Kablamo! What is it going to do that's going to make me actually click the buy button? I need to figure that out. Don't do something you'd be embarrassed to have in a recording. So I've been watching.
Oh, this guy's hilarious. Fuck, I need to start recording this. I need to record my reaction. What? I need to record my reaction to this. I should have been recording it the whole time. Actually, alright. I love this video.
Section the entire day since I started, and something I'm going to keep in mind today is to just look outside for like a certain.
Okay, let's get back to where he said that.
Important clarification to make and example to use when I say that I was monitoring my own thoughts. I know it sounds strange, but now you get it, and there will be more examples later. Let's continue.
Okay.
Today, what I'm going to be focusing on the most is looking at my rules a few times an hour. Now, I have an updated list. I'm going to make a new document each week because the problems we face are dynamic. They don't stay the same. Some of them go away, and sometimes we get new ones. Kablammo! What is it going to do that's going to make me actually click the buy button? I need to figure that out. Don't do something you'd be embarrassed to have in a recording. I've been watching...
He's recording himself live. He's recording all his trades. But he knows that other people are going to watch it. So he's like, don't. He's trying to use that as a filter for making good decisions, right?
Price action the entire day since I started, and something I'm going to keep in mind today is to just look outside for like a minute every 20 minutes or so, because my eyes are so exhausted at the end of the day. So
now here's a good point. He's right, and I don't know if he realizes how right he is. The whole time that you are staring, he's staring at like a minute chart or whatever, right? It's pretty intense. So the whole time that you're staring at a chart like this and watching every tick all the time and everything matters, it uses a lot of energy, okay? Mental energy, like brain, physical, chemistry, energy. Just like how running a marathon uses a lot of physical energy, at some point, right, you actually, at some point, you have to stop because your muscles need to re-glycerate, re-energize, right? They need to recharge their stores. Same with trading. If you're in something that's super intense and your eyes are glued to the screen and every minute, it's really taxing on your brain, and you need to stop and come back and take a breather, not physically take a breather, but you need to let your brain refuel, recharge. So him going out every 20 minutes to watch the birds sing for a minute is it's not only is it good just for mental health in general, it's actually brilliant for your cognitive process to be at a more optimum level throughout an extended period of the day.
Try to do that to avoid getting a headache, even when we filter.
Headaches are caused by multiple things. One is dehydration, one is exhaustion by intense focus. That one is the headache you get when it hurts behind the eyes and they get red and sore. Yeah, that's a lack of nutrients in the brain that causes that.
Out a little bit with a 5-minute chart. It's just so wiki, so much back and forth.
So they're saying so wiki, and he's talking about having these candles having big wicks, right? If you have a look at these, we've got decent bodies, average. That one's a bit wicky. Nice long body, and then all of a sudden you get this wick of indecision. Do back and forth. That's what he's talking about here.
And then when something finally does happen, it's super quick. And then it's back to doing nothing for a while. On a day like this, I would much rather not trade than take a few trades. To me, this is not tradable. Like, what do you do? You trade for 1.5 points in this range, or you take an entry down here with a stop loss down there, hoping for a break of consolidation up, or the opposite. Now, who knows?
So obviously he's looking for continuation trades. I don't see that as a no trade. I see that as I look for signals inside that to tell me when it's ready to break out. So although I personally wouldn't be trading that, although I think you probably could, because to see how consistent that was, if we go back, you could draw a line, and just catch every reversal over and over and over again pretty consistently. And then when that stops working, then you get out. But I would be using this as a level, looking for a greater signals to tell me when there'd be a break, whether up or down. Yeah.
Stop loss down there, hoping for a break of consolidation up, or the opposite. Now, who knows how much is true about stop loss hunting and all that stuff, but I'm more speaking to the fact that if I think it's going to do something, it's probably not going to do it, since I'm a beginner. At least when I put it down to something like 20 seconds, there's a little bit of a story in this consolidation. I think these are the days where I'm going to have to take trades with larger risk management, because trading the middle of this just seems like gambling, but it's not gambling to take a position on one end of the range, set the stop loss a little bit further away, and then put your take profit into a new area where you think consolidation will break. Go long. So it goes down. Okay. It's kind of tough mentally when trading based on FOMO is a profitable strategy.
I see he's gone back to green and red candles. This must be an earlier clip based on the other stuff that he'd shown earlier. Trading based on FOMO is well, I mean, if you guess and 90% of the time you're wrong, then you guess and have someone else take the opposite trade.
All these big moves, you just jump in on them, you'd make money. Okay, I want to get long here, but this would be a bad entry because we're in the middle. I gotta wait till I'm uncomfortable to go long. It's gotta go down first. Okay, now
go long. And
well, I was about to say I should jump in there because that's scary and not what I would normally do. If the trade...
he didn't take the trade. He was like, no, he didn't take the trade. All right. So that trade was exactly what I was talking about. Where is it? There. About waiting for it to hit one side or the other and then take the other side of the trade. That's exactly what I meant. I mean, it worked more than beautifully, but that's not the point. But that's more or less what I was getting at. Like, I'd have put, if I wanted to take a trade, I'd put a market here to close out here somewhere maybe, and then a stop loss here-ish.
Long. It's got to go down first. Okay, now I go long.
Take the trade.
Well, I was about to say I should jump in there because that's scary and not what I would normally do. If the trades that we took made us feel comfortable, then they probably wouldn't work.
Now that's a hot take. See, I can understand that as a beginner trader, okay? Because what's happening is the trades that make you feel safe and comfortable are the ones that you think you should be taking, and as a beginner, you don't know what you should be taking. You might think you do, but you don't. So the ones that make you feel safe are probably bad trades. The scary ones that put you on nerve, right? Those are the ones where your brain or body is fighting you because you're trying to look for or use new information, and it doesn't have a neural pathway built or a resistance built against that, so you get the flight of right response. So taking those new trades that are scary, going outside your comfort zone, well, if the ones in your comfort zone keep losing, then it's a good idea to start taking the ones outside your comfort zone, right? Because maybe there's something there. I think that's what he's getting at. Whereas for an more experienced trader, those ones that were scary, that you've seen work 1,000 times in a row, they give you a confidence that make you calm so that you're no longer in that fear zone. So as a new trader, scary is more likely to be a profitable trade. And as a more experienced trader, successful trader, by the way, if you're still not making money at all of this, then those trades still don't matter. That emotional response isn't meaningful. But if you've seen it 10,000 times and you're like 90% of the time this makes money, so it's a comfortable trade, win or lose, you're still happy that you took the trade, then that's the next stage or evolution of your trading experience, really.
Because a beginner doesn't want to do what's uncomfortable. Think about that, huh? Honestly, at this point, I'm thinking I may as well trade on the sim account, Because if I can't make money on the sim account, I certainly can't do it with a real account. The best way for me to learn is to take as many trades as possible, because I need enough data to make some conclusions about whatever I'm doing. One of the things I'm going to focus on today is not trying to time pullbacks. The reason for that is because I always fail to perfectly time the pullback. So if I always fail to predict when the pullback starts, I may as well just follow that direction. Like right here, this is where I should short instead of trying to time the pullback, because I'm never right about the pullback, so I assume this has more left on it to the downside. There was 4 points right there. I like trading the NASDAQ so much more than the S&P 500.
There you go.
It just moves so much more smoothly. Put a bunch of kids in a cannon and you just shoot them. All right, here's what I'm thinking right now. This chart makes it look like we're in a downtrend, because we are. But if we zoom out a little bit, this is just a pullback in a day of many
no,
pullbacks.
it's not. No, it's not.
Obviously,
That's the
I'm not gonna
reversal.
time
That's
it.
the top.
What? Obviously, I'm not going to try and time when this pullback is going to end and start going up, because that would require too big of a stop loss. But it's something I'm keeping in mind. Let me know what you think of these new colors. I'm liking them quite a bit. For some reason, red evokes just so much emotion in me, which is bad. I shouldn't have a bias or something that I want it.
Okay, I'll show you why I say ooh. These are my colors. Right. Maybe if you drop the green and switch the green to blue. Maybe. I mean, default candles are disgusting when you look at them after. I've been looking at those for... Honestly, I hate that. I can't handle it now. Oops. I cocked up. There you go. And that there is me testing a new account. I started with $50 yesterday, so I'm at $58 today. So, I mean, that's 20% profit in one day. So I guess that's not bad. I like to trade with little bits of real money, because it just makes me more invested than, you know, trading $10,000 on a sim account, because I know it's not real money. I'm not really invested in it. So I'd rather trade $50 fake money and make $10 in a day. That to me is more exciting than 10,000 fake dollars, you know? Even if my seed accounts are 10 grand each, it's not the point. Where's our video? Okay.
We trade up and down.
That's crazy profit.
So
It's alright. It's alright.
Be the greatest trader of all time because I changed the color of the candle.
Yes.
Maybe a bad trade because in my head I was like, "Ooh, I think it's gonna break the high of the day," and that's the kind of trade I'm trying to get away from. Oop.
Let me just
all time because I changed the color. So if all goes to plan, I will now be the greatest trader of all time because I changed the color of the candle.
Oh, I didn't realize that's you. I didn't realize there's 2 people in here. Huh, okay. Hey, buddy. Sorry, I didn't realize you'd showed up to say hi.
Candle. Maybe a bad trade because in my head I was like, "Ooh, I think it's gonna break the high of the day," and that's the kind of trade I'm trying to get away from. Ooh, don't be greedy. That's why it's in the notes. I just have no idea how to trade when it just keeps going up, you know, because if the trade didn't work out, then you'd probably think to yourself, I guess I just took that trade because of FOMO, you know, it just kept going up, so I went long. That would be true most of the time, but on a day like today, FOMO would be a winning strategy. It's really just a testament to how different each day can be.
Okay, so here's what's interesting, okay? I hear what he's saying. But at this point here, so if he'd taken a trade in here, if he'd FOMO'd in here, okay, and he got this jitter here, he'd freak out and close it again. And then it would start to take off and he'd be pissed off that he missed it, so he'd take a trade here, and then it'd dip, close him out again. Like, you'd just keep getting chopped. The only way to take these trades is to place one, place a stop on it, walk the fuck away from it. Place a stop order instead of a stop loss. And then if the stop order goes into a little bit of a loss, you can close it. Yeah, you close it at a loss. but you're still below this threshold. If the price closes into this threshold again, if the price comes down into this again and closes this, then you're done, okay? But if price was up here and was jittering around, if it comes back down, you break even. If it goes up, you keep making fucking money. I've stopped using stop losses, man. I'm never using them again. Well, that's not true. I do still use them. I use them as take profit margins. Okay, so I'd have to show you one that was in profit for it to make sense. Here we go. So this trade here, this short here has a take profit here. So if we were just looking at just from there, the entry, to there, the take profit, and this is the current price line, okay? There's the price right there. See it? So what I could do is I could put my stop loss here. See, that's plus 64 cents, okay? So even if it hits my stop loss, I'm still in profit. That would be the only time, like if I thought, oh, maybe price will hit this. If price got to here, okay, if I closed this, and then price got to here, and it was sitting in here, I'd move this to here and just let it run. And just forget about it. And one of two things will happen. One, it'll hit my stop loss in profit, right? Or it'll keep going into infinite profit. Now, I want to close that stop loss because I don't use stop losses. Anyway, and that's how I would solve this FOMO problem, because this here, exactly what he's talking about here, this was the thing that used to drive me fucking crazy. Absolutely drove me bonkers. And I keep trying to re-enter with this tight stop loss and re-enter with a tight stop loss, and then keep chopping, like it'd get to here and chop on me, and I'd like dip out and freak out, and no, I'm over it. I use this system now to it gives me breathing room. If it goes against me, it doesn't matter, because I'm break even no matter where the price moves until I'm comfortable to close one side or the other. It just gives you more room to breathe. That's all.
And how it's hard to make blanket rules about how to trade, because each day can be so different.
Jesus Christ!
Be looking for those candles that change the story. It could be a red candle after a string of green, or it could be a candle twice the size of what was happening before. Either way, these candles mark the beginning of a new story. Suddenly, things have changed.
Stories.
You need to adapt.
That's interesting.
I'm trying to think of price action in terms of the story being told, and when the story changes, I want to exit. And I think that thinking of it in terms of what story is being told, and looking for turning points and what's happening, calling those chapters is a good way to do that. Go long? This is the exact way that I want to be trading. The way I think about this is that this section right here is its own thing, its own chapter. And that chapter came to an end when we got 2 green candles in a row that kind of stalled everything out. It's a completely different structure than what this was. So, with the mark of that structure changing, I decided to go long. Now, it could have just stalled out.
See? That shows you in real time how crazy this is. Now, if this pulls all the way back up to here, I make money. If it comes down to here, it cuts me break even. But I've made profit from here to here. That profit is now pending, but I'm still in the trade. Now, if this comes back to here, that makes this worth break even, but I've made the $2 on this run, so I'm up $2. If it comes down to here and takes this out, yeah, okay, thank you. If it comes down to here and takes this out, this will hold into this profit line looking for the next big ass pullback. Either way, I have now won. I could be greedy and hold. I could close this right here. I could close it and be in profit now. It says minus 144, but my last trade was up $2.30. So this would be a dollar profit, okay? If I close this here. If instead I hold it and it goes up further, I make more money. If it comes back down here, about this point here, I'm break even. About this point here, I go down $1. But it catches this one and this holds it until the next bracket, which is another $2. And then if we get a pullback, I'm in profit again. But I mean, technically at this point, it's just a matter of how greedy do I want to be? That's the only question. That's the only real question. In fact, what I could do is I could move this up to here, and then if it breaks down on this, look, this is actually this is the move. This is the move. Okay, if it comes back down here, it catches this, and my profit is captured. If it keeps moving back up this side, then I'm just making more and more and more profit. If it doesn't touch this at all, it's profit. If it does touch this, I'm at a fixed point of break even. This is winning at life, brother. This is winning at life. $1 at a time. But you've got to remember that $1 is 2% of my account in a day. Right? And if we go to the calculator, if you guys are watching this, trading calculators, where's the compound? Okay, so we go with $50 at 2% a day, every day for a year. So if we go 1 year, include Monday to Friday, go. My $50 account will be worth $8,700 at the end of the year. So that's why a $1 win is exciting. If I just took that one trade every day, at the end of the year, my $50 is $9,000. Pretty crazy.
And kept going down.
Anyway, what was this guy saying?
An end when exactly that I want to be trading. The way I think about this is that...
Wait a minute. I just want to babysit this for a bit. Sorry. I've got a heavy... I'll put that there. Yeah, okay, that'll do me. And then this one here is going to be to that line there. And because that's not a major enough zone, I don't really give a shit about that zone, to be honest. I don't respect it very much. In fact, I don't really think that price doesn't respect it either. So this here is just random noise. This isn't actually a real zone. This here, not a real zone. Not a real zone. And that says it's blue anyway, which is interesting. So we should change that color to blue. So there is a blue zone there. Let's make sure I've got a ping on there. I do. So when that pings, I will know to come and put eyes on it and decide whether or not to close it. So, all that being said, Let's go back to the video.
This section right here is its own thing, its own chapter. And that chapter came to an end when we got 2 green candles in a row that kind of stalled everything out. It's a completely different structure than what this was. So, with the mark of that structure changing, I decided to go long. Now, it could have just stalled out and kept going down, but my stop loss was a few points away. At worst, I would have taken a $9 loss if this pause had resulted in a continuation down from what was happening previously. But it just happened to go my way. Trading is just hoping it goes to one line on the chart before it goes to the other line on the chart, which is something I realized
That's beautiful.
after 20 minutes in a hot tub. When you're thinking about being greedy,
That's beautiful. I'm such a fan of this kid.
think about what the candles look like. Would you jump into the trade if you weren't in already to continue the direction? Or would you not jump in? Pretend you're not in the trade to determine what you should do next. If you wouldn't jump in and go long halfway into a position you're already in, then why would you bet on it continuing to move up? I only took this trade because it bottomed out here, did that, and then like nothing. No follow through. Came right back up.
Crazy beeping happened. It just took the trade there. That's all. Nothing. That's fine. We carry on.
So, got basically a perfect entry right here, just playing for a little bit of a pop back up. I figured it might come down and break this, but I figured it was more likely that it would come back up before doing that again. I'm going to bring this up a little bit. So it's only an 8-point risk for a 10-point reward. I don't think it's unreasonable to think it might come up here, although my timing, admittedly, was a bit late. So this entry should be down here. That way the risk can be super small. Might work, might not. But if it breaks this candle, I think I might move it to break even.
Now, I hear what he's saying, but I disagree with him. Because his entry was late, he screwed the entire trade, right? A bad entry is a bad entry. Even if it goes into profit now, which is fine, if you're late to a trade, you shouldn't be taking the trade. Right? If you have a signal that says this is where you take the trade for a specific risk to reward profile, then you shouldn't be taking the trade if you missed the signal. You missed it. Wait for the next one.
No, I'm not. Don't do that. Yeah, I am. No, I'm not.
Don't touch it.
Nope. Putting that there. Lost confidence in this. Put that up just a little bit in case we get a big pop. There we go. I'm getting out. Glad I did that. Ow. Well, if that isn't a great lesson on why I've written in my notes like a million times not to play for pivot breaks and to take the profits and I don't know what. It looks like a lot of momentum. I should jump in.
So he's looking for pivot breaks. Wow, that was a lot of... You've missed it. But wow, that was a lot of woomph. He's playing 2 pivot breaks. I play off pivot breaks. So a pivot break is where you get a new recent high or a new recent low that changes direction, and then the high or the low. So this here exactly, right? So we've got a new low, and then it's changed direction. This is called a pivot. It's done it here. There's one here. See, there's kind of a pivot here. And then the next real one is probably this one here. So you've got a pivot point here and a here. So what he's saying is he's waiting for a retracement to that pivot point. Whereas for me, I see them as opportunities to go short or long. Like I'd go short on that now. Whereas he's looking for a retracement to go back into it. So he'd be taking a trade down here somewhere. It's just...
And we are now 50 points higher. But that's also a bad way of thinking. Oh, if I just got lucky once, caught one 50-point move, that would make up for a few days. You know me, I say things. But these are just thoughts. These aren't conclusions. Haven't actually made money on a single day yet. Nice, cool. I love trading. This is a 500 tick chart.
That's his profit and loss zone. I love trading. Negative, 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 negative. I appreciate it. I really do. Oh, come on, buddy, play.
Nice, cool. I love trading. This is a 500 tick chart. This green candle sort of made me think, hey, I think we might turn around here, and if we don't, I really don't have to risk much for my idea to be invalidated, so that's why I hopped in. It feels so silly to be like thinking so much about like the entries of like where you would get in here, try to grab 3 points or something.
When you get a rip.
And 5 minutes later, it goes down 30 points in 16 minutes.
Yeah.
Like, this moment was so intense just to go from a 2-point profit to a 2-tick profit, and then right after that it was like, what is this? Let's go to the real account. Already my stomach goes, and then this time though, I think it's going down. Can't just keep doing the same thing, you know? I want a short here.
Cooked.
Oh boy. Okay, this trade was stupid because I entered at the top, wanting it to go up. If I want it to go up, I need to enter at the bottom. This trade's a little embarrassing. I don't want to be trading, trying to get into new areas.
Blah, 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 blah. Take another short. Look, it's choppy and shit, right? But you've got a trend up, and then it's failed it, and now you've got this downtrend, right? The way that he's trading, like the trend line that he's trading, this is what he should be doing here. It's not how I trade, and it's not how I would recommend anyone trade, but the methodology that he's using, he's using this here, is now a downtrend, and he's bitching because he's... Shut the fuck up, take a short into that. Honestly, just take a short into that. Put it, this level here is your take profit. This here is a real fucking level, right there. That line there, that's been respected real hard by a lot of traders. Look at all this. Take another trade, put your take profit there, put your stop loss there, and then just shut up. Just shut up. Shut up, Iman.
That's what that was. That's just counting on luck. It's like I'm right a bunch of time.
What did I tell you? That's the trade. Look, there's the line I said. This was the risk I said. This was the candle where I said, shut up and take the trade. Yeah. I know things.
I'm like, okay, you just got to trade. And then I'm wrong. And then so the next time I think something, I'm like, no, don't do that. And then it works. And then it's just like a loop, a cycle.
Now that is a trap that catches... I need to turn this on. That is a trap that catches a lot of traders. And this point that he's talking about right here is where a specific type of self-doubt starts. And that self-doubt is the seed or the trigger bot that will knock weaker traders out of the game altogether. This is the point that makes normal people with no fortitude quit. They start doubting themselves. But the reason they're doubting themselves is because they're learning more. They know more now than when they went in, and they've got a bigger base of information to work from and sort out, and they're closer than they ever have been to becoming a consistently profitable trader, but they feel confused and disillusioned and don't know quite what's going on, and their brain hasn't had time to sort through all of the signals and bits and bobs that it's seen, that it's confusing. Like, you're trying to find a level in your mind where you get some kind of consistency, and your brain's trying to figure it all out. Gets stressed out about this, and it stresses you out because it's creating new pathways, and learning is hard, and it's doing a lot of learning without you consciously being aware of it, and that is stressful, and it causes people to quit in this moment. And this is the moment where it starts to make sense. If you'd stay just a little bit longer, you'll have a whole lot of new filters to look at the market through, and refine your process, and refine your psychology, and refine your understanding of markets and patterns and whatever it is that you're looking at. And this is the point where you start to lose a little bit less more often. You're not even break even yet. You're just at, I'm not losing as much as I used to every time I place a trade now.
They'll figure it out. To a certain extent, you just gotta guess. Eventually the puzzle pieces will fit together. That's gonna be a long time. You have to be okay with that. To some extent.
This guy is winning! I'm telling you! Okay, I'm going to stop this recording and then restart it because I don't want to run out of room. I might need new hard drives. Start. Okay, Iman.
You can't think about the video. Get it. They'll figure it out. To a certain extent, you just gotta guess. Eventually the puzzle pieces will fit together. That's gonna be a long time. You have to be okay with that. To some extent.
Yes. I mean, that's what I said before, right? He's just putting it quite succinctly. This guy, just so that you guys are aware, I'm not too sure exactly, but he's got like a psychology degree or a psychology major or something like that. And so when he talks about his own internal brain stuff, he knows a lot more about how it works than I do. It's just that I've done it from the other side where I've done these things and then sat back and looked at it and gone, Whereas he's been taught all this stuff first and he's applying it to trading. Whereas I've done it over life, learned lessons, and applied it to how my mind works, and then learned to work alongside with, or when to learn when to work against it, because it's not always working for you. You know, habits and your own internal monologues aren't always, they were built at some point to protect you from something, but that doesn't mean that the ones that worked for you when you were a child are still going to work or serve you now. The ones that used to keep you safe are now either holding you back or sabotaging you from moving forward.
Then you can't think about the video. Have to think about the trading and be okay with whatever it is that gets uploaded. Like, go on here. Alright.
I traded in price action that I've said isn't good to trade. Good for him, okay? To be fair, I can trade that shit. I find it really hard work. I don't like it, which means it's not good for me to trade. I can trade it. It is tradable. He's right that it's not really very good. It's hard work. You get chopped a lot. Otherwise, you just get chopped up. And you still make stupid mistake of trying to get in on that one time and that candle that will finally break consolidation, right? So he's trying to find the breakout while he's trading through chop. And I'm going to say the next thing he says is that it reversed on him anyway. Chances of the timing are so low. Why would you try to do that? Right. So instead of, what he's trying to do is he's trying to predict the breakout instead of waiting for the breakout and then trading the trend, right? You make less doing that, by the way. You make less by waiting for a breakout, then taking that and just taking the body than what you would if you caught the bottom and caught the top. But you make more because you get chopped out 10, 15, 20, 114 times, by the way. One of my algos got chopped out 114 times and chopped the other day. Trying to catch the bottom of an eventual potential maybe breakout, maybe. So you'd be better off to just wait for the breakout, catch the body, catch a little bit, take one profitable trade rather than take 10, 13, 20, 40, 100 losses, waiting for that one monster rip to make it all back. Far less psychologically painful, less psychologically rewarding because you don't get that dopamine hit of wee big win, but it does help form a better habit because consistency is boring. If you're not bored, you're not working. Trading is a job. If it's not boring, it's not a job. It's exciting. Gambling is exciting. If you're trading and finding it exciting, you're not trading, you're gambling. It should be boring. It should be consistent, like a job. That's a take. So anyway, why are you trying to do that? A bunch of trades in your head and do well, and you finally take one for real and loses, and you're scared to trade then lose. You immediately take the winners and actually take the losers. You then have to take all of them, or else you'll stay stuck in a bad loop. Trade like 10 times in a day, or don't think about it. Right, so he's overtraded here. Okay, overtrading. This specific type of overtrading is caused by a little bit by FOMO and a little bit by boredom. Okay, I'm afraid I'll miss the move. Stop being afraid of missing the move. Just wait till the move is confirmed and then take what's left, right? The truth is that most of the time you're sitting there watching. Nothing's happening. I want something to happen. Something might happen. And you take a trade. You haven't waited for an actual signal. You got bored. Overtrading is caused by boredom.
Future I-Man here.
Oh, wait. I have to read the rest of this, but he's about to tell us his story. You're on he's aware that he's on some kind of breakthrough. Not being seen hard to be discouraged when you look at the. It's hard not to be discouraged when you look at the trades you took. Good and bad. You see, it's good to be discouraged from taking bad trades, right? Look at the ones. Today's trades look like the ones you took from week 1, and you've got to take a step back and think about the lessons you've learned. This is good thinking. Readjust your notes to focus on what problems you're having, especially with the consolidation stuff, and watch. If it's embarrassing to upload some of these trades, then don't take the trades. Right? Still upload the video, just stop taking dumb trades. That's what he's saying. First trade was great, even though it didn't work. Great attitude to have, right? My setup was perfect, took the trade, it didn't work out, that's fine. That is good trading, because it was a good setup, and I believe in my setup. That is good trade. Second trade was just fucking stupid. Yep, recovery trade or a revenge trade, because the first one didn't work the way that he wanted it to. The third trade was, what the fuck? That's overtrading. Still way cheaper than college. Also, if you're reading this, I appreciate your support very much. Yeah, good on you, lad.
At a great time to pause, since this is exactly 1 month into the experiment. At its core,
wow! That's true. Everyone is out for the rush. Yeah, and the reason is because of the marketing, of the way that the Lambo gurus market themselves, right? Like, oh, yeah, I'm up 10K. It took me 3 minutes. I'm out for the day. Yeah, no, those guys are just gambling, bro. Telling you. They're not making money trading. They're making money off selling you a course or a signal service or some trash.
This period of time is characterized by the exploration of ideas. A few good ones, a lot of bad ones, but we're moving slowly right now because this is where learning is the most dense and important. By now, I had a very surface level understanding that trades and consolidation should not be about timing when it would break, which is why I was so disappointed in myself in that last episode.
Okay, he's actually reinforcing what I just said here. He's saying, trade. So he's reinforcing 2 things that I've said earlier. First, that he's realizing that there's more information and he's learning more, and there's more to learn here, so not give up. And then the second thing he said was that he's given up, or he shouldn't be trying to time the break. What he means is it's still consolidating. Don't take a trade until it's shown that it's broken the level, instead of trying to predict when it's going to break the level.
That's a good representation of the separation between realizing something important versus applying the realization. You have to actually grow from a lesson and have it drilled into your head so hard that it doesn't require a reminder anymore, which can be a long process depending on what it's about.
There's a lot of schools that say you should only take one trade a day. This guy is saying you should take 10,000 trades a day so you can learn from them. Right? And then drill it. Drill it, drill it, drill it. And I tend to agree with that philosophy. But they must be meaningful trades. If you're doing this, you need to stop every 10, 20, 30 trades, depending on how fast you're going. Look at what happened, learn a lesson, take a break, take a breather, get some food, get some orange juice in you, beer, whatever your poison is, and then go for another session, so that you are progressing all the time rather than just bashing your head against the wall without stepping back to look at the wall to realize that you could have just walked around it. There was a door over there. You could have just climbed, walked through the door.
Some things are easier to grasp and to be a catalyst for change. You might find that timing a big move is very rewarding and makes you feel good, so it's a constant battle to stay disciplined and make the correct but less rewarding decision. It makes you feel cool to win some low probability trade, just like buying scratch tickets or going to the casino. Having the rarest thing work makes you feel good, and that can make you deviate from executing what the data says is the correct decision. Meaning, sure, you might get some rare correct guesses every once in a while, but over a large series of trades,
that's going to be a negative win, negative profit. That's bad. That's really bad. What would be better is, I wish I could draw on my screen here. So see this here, right? Just for example, see this here, okay? Beautiful, beautiful line, trend line. I don't trade this way. It's just an example I wanted to share, okay? At this point, this candle here breaks. This line goes down to here and it breaks this line, okay? And it closes above. So what you do is you take one trade. You open it for one candle. It goes up to here. You close it. You have only made this much on this move. Psychologically, you look at that and you're like, well, that's a shitty move and I didn't get most of the move and I didn't make any money and blah, 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 blah. But you have got more probability of catching that one candle consistently than what you have of seeing this candle and go, I'll buy on this candle, then lose. There's a green candle. I'll buy on this candle and it moves against you and you lose. And then I'll buy on this candle and then this one here actually takes off. And then this actually would be a great trade. But to have done that, you'd have done that here 1, 2, 3, 4, 5, 6, 7 times before that win. And you'd have lost this much, this much, this much, this much, this much, this much, and this much.
Math will tell you
before you made this. And I promise you, this here is probably double net the loss of the win that you would have made on this side going up. So what's better? Taking those 7 losses, which equate to more than that one big rip up, or just taking this out of the guts of it at the end once? 7 to 1 or win 100% of your trades? Which one would you? I know which one is psychologically easier to trade. Less rewarding psychologically, sure, maybe, but long term, I don't need to be right. I just need to make money. 7 losses to 1, or just win that one trade.
What you should do every time. Don't try to guess when the exceptions to the probabilities will happen. Of course, I was nowhere near understanding this at the time, just an important thing to cover. We'll go over that more later. But for now, just know that we are fighting our own biological impulses when trading, and the incorrect consolidation trades were a great example of the disconnect between what I knew I should do and what I actually did when it mattered. Thinking about thinking is just as important as the thinking itself. Really think about the fact that you are a reaction to yourself, unless you have no internal dialogue, I guess. And that brings us to day 6, when I realized the overall concept of a reminder document and the fact that it should change as you grow.
That was a terrible trade. Even though it made money. I mean, it would work He's leaving so much on the table by doing that. He's moving his stop loss. He's chasing, trailing stop more or less, right? But he's moving it at the worst possible times. Either put a actual trailing stop on and walk away from it, or you're trailing, or if you're going to trail those stops like that, think more about how much a random move is and then go a little bit bigger than that. So you want to go a slightly bigger probability than the average move. And then you are, on average, less likely to get stopped out.
Solve old problems, new ones come up.
Oh, by the way, that's massive. You should write that down somewhere. Okay? And that math, you use standard deviations to figure out just exactly how much that should be, by the way.
And so on and so forth. Eventually, you might not need reminders for...
Write what down? That if you're going to have a trailing stop like that, if you're going to trail your stops, what you do is you figure out what the average is, and then you go slightly larger than the average to where it's more probable that it won't hit it than it will. So that, like in a bell curve, like in a bell curve. So that an average move, on average, will not take you out more often than it will move down to the take profit. So if in that case, right, it was going down. So it's going to wiggle all the way down, right? If those wiggles, if you make your stop loss this big and the wiggles are this big, and it wiggles like this, and you put this here, it's going to wiggle straight out of your stop loss, okay? You need to make your stop loss bigger than the average wiggle. And then you're going to be less likely. Does that make sense? To hit your stop loss and more likely to hit your full take profit. Does that make sense? Do I have to draw it? Yep, I am waiting. Okay.
Specific rules and ideas to follow and change as you grow. You solve old problems, new ones come up, and so on and so forth. Eventually, you might not need reminders for specific rules and ideas to follow, but when you're new, they're incredibly important. As I've said before, the only alternative...
They're important when you're new because they're not automatic. As you've done it more often and you've reinforced these rules, they become automatic. So you're still following them. You just don't have to read them every 5 minutes to remember them. The challenge is making sure that you've created good rules to follow in the first place, so you're not automatically following bad advice that you created for yourself, which is what pretty much everybody does.
Alternative to reminders is if you believe that you can fully implement a new thing you learned with 100% precision and without ever forgetting it. Maybe you're the smartest person ever, but I'm not. So things like reminders, journals, reflections, and notes are all just parts of the actionable steps involved in achieving real learning and growth.
I've been trading for 8 years. I just wrote new notes, right?
The evolution of reminders is a reflection of your growth. I'm not playing every trade I did in the background, just using some of it for background video. But there was a strange disconnect between understanding that I was a beginner versus making bold and unfounded declarations. For example, saying I'm not good at trading consolidation and I should sit at...
Those are new rules for a new strategy that live long learning. Yeah. Lifelong learning. Those are new rules for a new strategy that it's an old strategy, but with a couple of new refinements. And I don't care if you read that because it won't make any sense to you if you don't have the custom generated indicators that it's based on. Well, yeah, it might make some sense, but it's not going to make any sense to you because what is red and what is blue? What creates that condition? If you don't know why one is red and one is blue, then it doesn't mean anything to you. There's a pause button, buddy. Record and pause, right?
Out because it's not moving. First of all, you're not good at anything. So what are you doing by limiting yourself with these very factual seeming statements that are certainly not backed up by rigorous amounts of testing or data? Of course, this specific claim and other...
Isn't it interesting how he will say something and I'll like blah 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 blah, and then in the next sentence after I unpause it, he's like blah in one sentence. Okay, do this again.
There's a strange disconnect between understanding that I was a beginner versus making bold and unfounded declarations. For example, saying I'm not good at trading consolidation and I should sit it out because it's not moving. First of all, you're not good at anything, so what are you doing by limiting yourself with these very factual seeming statements that are certainly not backed up by rigorous amounts of testing or data? Of course, this specific claim and other related problems mostly go away in the next few months, but it's worth bringing up. Don't put yourself in...
Also, he said that in a consolidation, it's not moving. That's not true. It is moving. It's just that the moves are under the surface.
A box until you've really tested out everything for a long time and can actually back up a definitive statement with proof. Feeling like something's true doesn't make it true. Another disconnect was between wanting to make money versus truly accepting that this was the most extreme part of the experimental phase. And again, I never should have taken any trades on a real account, even if it was on micros for just a couple dollars per point. Although I did frequently talk about how I felt like I took trades more seriously on the live account. Then again, what does...
Which is exactly why I test on $50 or $100 accounts. Right, live money. Because it forces me to be emotionally invested. That being said, I'm at 2,000% margin.
More seriously even really mean when you have no edge and are experimenting. These words, which years later basically became the entire...
Tom Dante, didn't he write a big fucking book? If you find you lack discipline and keep taking poor trades out of boredom or frustration, there's those words again, motherfucker. Have you ever tried acting like a fucking professional? What a great take. My philosophy when trading is simple. When I'm taking a position, I ask myself, how surprised will I be if this stops me out? Ooh. Ooh. So he's a directional trader, like a momentum trader or a levels trader or something. If the answer is anything less than very fucking surprised, I don't take the trade. Wow. I like that. I mean, it's not my trading style. What he's saying is he's using his trading knowledge and intuition and asking it if it's a highly probable trade, and he's only taking the highest probability trades. Now, in my book, I have in my rules something very similar, okay? And that is let's see if we can find it here. I can't remember what it was I was going to show you. Yeah. Yeah. Here you go. Hey, where'd they go? There we go. Very, very similar concept, right? If you have A, B, and C grade setups, why? Just take the A pluses, man. The B's and C's are just for boredom. Just take the good setups and lean into them harder, okay? If you've got an 80% win rate and a 50% win rate, why dilute the 80% win rate? Just use the Kelly criterion or something similar and bet harder into the 80% win rate. It's significantly more profitable. And by significantly, I mean exponentially, by hundreds and hundreds of exponent. It's crazy the difference. 20 good trades at 80% is like 200 or 300 times more profitable than taking 2,000 trades at 55% win rate.
Reminder I read while trading would have also helped me early on. The solution to not taking a sim account seriously and trying to apply what you've learned is not to use a real account, it's to start acting like a fucking professional. The core problem was that I was not taking it seriously enough, and you don't fix a tree problem by looking at the branches. You fix it by addressing the foundation, the roots. The problem was not acting like a professional learner. Regardless of whether you're currently developing a system or if you're already using an established one, ask yourself if you're following these words. Very quickly, it's important to understand the overall mental environment of a beginner. Of course, I made stupid mistakes. I was looking at an enormous amount of notes and completely new ideas, so it's not surprising that I'd say one thing and then go completely against it the next day. For example, talking about how I was being greedy with profit targets and then doing it again the next day. That's the reality of starting something new without any outside input. You are at risk of
Once I started this journey, I shut myself off from all trading related content. Fucking great piece of advice, okay? Great piece of advice. What I recommend is that you do something to learn the mechanics of trading. How to fill out an account. How to place a trade. What is margin? How do you calculate margin? You know, that stuff. Okay? Learn that from somewhere if you want to. That's fine. And then just go in blind. You will learn so much. Number one, you will learn a lot more. Number two, you will find patterns that and ideas that are attuned to you. And number three, most teaching training material is set up and made by big banks and big institutions who want to teach you where to put stop losses so that they know where your stop losses are, not because they're reading them, because they taught you where to put them. So then when you get this random wick that takes out the stop loss that was just below the recent low, oh, they're hunting my stop losses. Yeah, and they told you where to put it. So, if you went in blind, you would notice this pattern where how often you get this level like this, and then, oh look, there's a breakout. So you take the breakout and you put the stop just below, and then what happens? It reverses straight into take that, and then it takes off. That pattern happens on about 90% of those levels. I could show you on the next one. Look, I'll just find one right here. Okay, here's a good example. Right here, right in front of us. Current candle. There's your level. Right there. Right, you've seen that. You've seen that. Drop there. Okay, this here. So now we've got this breakout to the top. Chances are it's going to dip back, boom. See this one here, does it? It dipped back, boom, and now it goes up. This could be it here. This could be the fake out one here, actually. And let's go find a really, really, really beautiful example of this, where like a clean example. Come on. I want like a really... Oh, Bitcoin will have one. Bitcoin over the weekend. Remove all drawings. Right, Bitcoin over the weekend was here. Oh, yeah, that one actually works in your favor. And then you've got another one that's like from there to there. Yeah, there you go. And we'll take that one and make that into a normal. And then just get rid of this one because that doesn't make any sense. See, here you go. So this trade here, good example of it doing exactly that. It trades at this level, hits the top, comes all the way back down, right? And then it goes your way. But before it does, it hits this and then it comes back down again before it takes off. These are intentionally placed. These drops, where it drops just below the common level, here's your common level here, and it breaks just above. Cool, time to take the trade because that looks like a breakout, right? And then it drops back down and then it takes off. That is intentionally placed. Someone taught you to put your trade here on this breakout. The same person that dropped the price here a little bit before he sent it up here, which was $2.5 grand for me over the weekend, by the way. Just saying. Just saying. Anyway, back to my actual account. That's trading live right now. Yeah, so that there was one lot, right? I'm pretty sure that there was a one lot, $2.5 grand trade. I should go look. Oh, one lot, not 0.1 lots. Okay, 1,200. All right. Oh, yeah, well, I made money on the way down as well because I caught that top. Which reminds me, now I have to go and put all that shit back that I deleted. Yeah, okay. See, I caught the top. Ah, very proud. I'm very proud of that, by the way. It was very, very vindicating to catch that pixel perfect top, man. I was so happy with that run. Anyway, enough about me. Back to the video. Ooh! Okay, we're getting close. We're getting close to something good.
Cognitive biases, poor memory, and everything else, but you are advantaged by starting completely fresh. I will eventually identify these errors in thinking, but that's only because of speaking out loud, journaling, recording everything, writing about different ideas, and all that other good stuff.
Yes. So the key to going in blind and learning your own biases is self-reflection. And I said that before about where you trade for a bit, 10, 20, 30 trades, whatever, step back, look at it and go, oh, I just keep making the same mistake right here. And then stop doing that. Or do the opposite. Or figure out why you're making the mistake, or figure out why the market acts that way at that point, and learn from those moments. Add data in to counteract or interpret those moments. Instead of putting indicators on and looking for a pattern, look for a pattern, then find an indicator that shows that pattern or predicts that pattern. Go for price first, indicators second. Indicators are a terrible predictor, generally speaking, right? They are great at measuring. They're a great measuring tool, so they're good for risk management. Anyway, carry on.
This never would have happened by just staring at a chart and taking random trades while expecting to somehow make progress with no effort. Mistakes and setbacks will happen, and learning with trading is not linear. On day 8, I said, at least when I put it down to 20 seconds, there's a little bit of a story in this consolidation, which means that I was sort of, but not really. On the verge of realizing / understanding that timeframes merely filter in and out how much information you see. They don't actually mean anything or change anything when you're watching price action in real time. You're just choosing a spot in time where a rectangle will put its top and bottom for action that's now finished. If you're backtesting in a way that just looks at the candles instead of doing a market replay, then sure, maybe it's important then. But if you're testing out stuff the way I did, by
Okay. Break time. Oh, fuck, it wasn't recording. Motherfucker. Okay, annoying. This should be like 1 or 2 pivots now. Yeah, okay. So we've got, we close. No doubt. Okay, I need to move that pivot back 1 more too. Really? Bro. That should come down now. This guy here. That's better. Okay, so that should keep going up. Alright. Well, that was fucking stupid because my tool wasn't set correctly. So that's my own fault. Something about having all the information. I was being too fast, watching the video instead of watching the time. No worries, bro. This guy here is now obsolete. So we take the alert off him, put his price there, we convert him to a blue box. Hey, buddy. Now see, if I hadn't put this trade down here, I could have been up even further, right? Another 3 in profit for the day, but shit happens.
Watching what's happening and not just clicking an arrow key and making the next candle finish, it doesn't matter. Nothing actually changes. Time frames are merely filters. Going lower changes nothing beyond showing you more information on what happened.
Time in trading is merely smoke and mirrors. Only the levels matter. Candles are price levels divided by time. Price divided by nothing. Smoke and mirrors. Candle patterns mean nothing on their own.
One funny observation you might have made is that I didn't want to trade direction because I thought I'd only be getting in due to FOMO, aka the fear of missing out on the move. But I also didn't trade consolidation because I thought price action wasn't doing anything. It's interesting how I kept trying to rationalize price action and to find a reason to not take a trade, which was partially due to the fear of losing money on the live account. No, those are not good reasons to not take a trade. Those are just the statements of a guy who doesn't understand yet that price action can do anything, and that it always exists on some spectrum between direction and consolidation, both with their own types of high.
All price action exists on a spectrum of extremes somewhere between consolidation and direction. In consolidation, price more likely to stay where it has already been. In direction, price is more likely to go to a new area. It's also relative to itself, okay? Because if you look at this, this looks like a trending direction. A rough trend, maybe a reversal here, right? But you know, if I do this, it's now a consolidation. Because on the larger time frame, it's a consolidation. So it's relative. I see a big red. Let's take that out. I feel like chicken tonight.
Higher probability wins and losses. In a sim account, I would have learned that sooner by being rewarded for trades that would have worked or not depending on the underlying price action characteristics. So no, I was not trading due to FOMO. I was not trading due to not understanding which type of trade is good for which type of action, which in this case was when price is highly directional or moving with momentum. I'm getting...
He's saying learning when it's consolidation and when it's a trend, and then taking reversals in consolidation and taking continuations in a trend. That's what he's saying, I think.
A little ahead of myself, but also not really. Just clarifying the incorrectness in some of the things I said as a beginner and then explaining why that is with the benefit of hindsight. Because again, everything I'm saying is done with the idea and hope that it will help you. Which takes us to my idea on day 9 that good entries are scary. And yeah, that's sort of true for many, but not all situations. At least it is for me. Because my unique, but also not unique at all because I'm also human, brain and biology decided that it's scary for me to take any trade that isn't just following exactly what the current candle is doing. That's fine in extremely clear direction, but most of the time, a good entry means reversing at the edges of a consolidating range or getting in on a small pullback during direction. So I realized that if I was uncomfortable or scared to enter, then that was maybe a good thing, because I was naturally inclined to take the worst possible trade at all times, meaning trying to time reversals in direction, but especially trying to time when consolidation would break, which meant going long at the top and shorting at the bottom, with a stop loss inside the zone and a take profit outside. Sure, it worked sometimes, but not nearly as...
That was a terrible trade. Terrible trade. That's a terrible trade. The reason that that's a terrible trade, I wish I had a fucking overlay so I could draw on the screen, right? The reason that that's a terrible... Okay, the reason that this is a terrible idea is because you have... I don't know if there's a draw tool here that makes sense. This zone here is where all the action is. Okay? Every time it comes down to this level here, it comes back up. It's come back down to this level. Why do you think it's now going to go down? Without some extra information or some other detail or some kind of context. Oh, what the fuck, my screen just showed. Okay, there we go. My screen is tripping out. I need to buy a new one. So the logical thing to do here is to take a long trade to about this area where it comes back to all the time. Oh, the screen. I'll be back. Okay, its screen gets hot and it just starts turning off randomly. Like that. Like that. I might have to pause here while I fucking fix this, but whatever. Hang on. Some reason, all of the reasons. Here we go. Yes, no, maybe. Okay. Maybe. Okay. And then put this back on here. Okay. So yes. So as I was saying, the sensible place is here, right? That's the most common area where price has been. This extreme here is the best, most sensible place to place a long trade, and this is the most sensible place to place a short trade, right? This here would be a terrible place to place a short trade because it is in the highest zone of, like this zone here. Is there another? Can I do it? This zone here is a dead zone. Do not touch anything in here. In fact, this area here, you'd be better off shorting long, short, long, like taking the zigzags here, okay? This is your re-entry area, and this is a re-entry area. Eventually, price might break out of this, and at that point, maybe this whole consolidation is done, and then you start taking the breakout trade. But what he's done is he has taken the highest zone area where price returns to the most and use that as the stop with a potential breakout trade as a win. And so what he's done is he is on this specific drawing, it is more likely to come back to this zone than it is to break out. 3-4 times more likely to go back than it is to break out. That's what makes this, as it's just a drawing, I know, but that's what makes this a terrible trade. And I think he's basically saying the same thing. And I beeped. I don't like that beep. I didn't like that. I knew I wasn't going to like that beep. Okay. That's alright. We hold that trade until it wins or closes now. There's the first zone. What is that off? That's off this, which is a bit of a weird one anyway. No, we just hold until. So now price has either got to go to this level or this level, so we don't touch anything until it hits one of these two sides, basically. We out. That might be our last trade for the day. If I hadn't taken this trade, we'd be in a great spot. So that being said, why did I put it in here? Why did I put it in here? Oh, look at it coming back down now, you fucker. I probably shouldn't have, to be honest. Yeah, I shouldn't have. It actually goes against my system, my new system that I'm still figuring out. Oh well, opportunity to learn something. Back to the video. Yeah, I shouldn't have taken that trade because this originally, if you've been watching through, closed out in profit somewhere down here somewhere. Right? What is this? Was I drawing something for some reason? Okay, so we closed out in profit down here, and then I put a backstop trade in. I should have either put this here for a continuation to there, and had this one here, like I did originally, and just walked away until it hit one side or the other, waiting for a retracement. Yeah. Okay. Oh well.
Zone and a take profit outside. Sure, it worked sometimes, but not nearly enough times to offset the losses from it failing. And this was really important learning because
if that's the case, then reverse it and you have an overall net profit.
It essentially became the foundation of my entire strategy. Let's not get ahead of ourselves though, which transitions perfectly into realizing that I was always wanting price action to break some pivot or spot that I deemed significant, and then more
that he deemed significant, not that he saw the market deem significant.
Importantly realizing, wait a minute, why do I actually want price to do anything? Those types of weird biases just cloud your judgment, plus going for a break in the high or low of day.
Just trade what's in front of you, not you. Trade what you see, not what you want to have happen.
Or some major pivot can be a fine play, but it's completely dependent on the underlying price action type. On a directional day, more likely. On a choppy day, less likely. That context was not understood at the time, so my conclusions about various problems were more like, alright, don't do that thing ever, never do this, eliminate that completely.
Instead of today.
Those types of extreme position.
So what his system is he filters price action based on whether today is generally trending or generally choppy. If it's generally trending, he takes longer trades, breakout trades, and if it's choppy, he's taking reversals.
Rather than being nuanced, like, hey, that's okay to do, but only if blah 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 criteria is met. Nuance, okay? Gray areas, variables, exceptions, advanced stuff
discretion.
You don't understand when you're new because it's new and you haven't learned it yet. If being greedy with profit targets a bunch of times sometimes failed and sometimes worked, going back and seeing what was happening and finding correlations in the failures and successes can spark more ideas to explore about why it worked or not. Failure is great. It makes you learn something. The major point I'm trying to make is related to what was said earlier about extremes. The words never and always are dangerous. Rather than trying to completely eliminate or always do one thing, you should take a step back and look at what else is going on. Price action as a story and splitting up different moves into so-called chapters was an interesting idea. It's not like any of these things I was thinking about were meant to be like, oh, what a great idea. Now I will be profitable. It was more like...
Here's an exact example of exactly the thing we were just... Where the fuck did we go? I've lost it.
It helped reinforce the changing of price action. Might have everything in full lesson in what a great, it's not splitting up different...
Right, this is exactly the thing I was talking about. Wait, I'll show you.
So-called chapters.
Here, this moment here. See, we're in a trending market here. Okay, prices breaking new lows all the time. Okay, and this is the chop through here. This line here is the busiest section in this last hour or 5 minutes or whatever this time frame is, right? And he's put his take profit there. But, so I understand the logic behind that. But, we're in a trending down market and he's got a tiny stop loss in a market where it tends to go down more than it goes up. So he's more likely to hit this than he is to hit this by exponential means. This is not a well-geared trade.
Was an interesting idea. It's not like any of these things I was thinking about were meant to be like, oh, what a great idea. Now I...
And he's moving his stop loss more aggressively into make it more likely to hit the stop loss than to take profit.
will be profitable. It was more like, how can I enhance my learning of everything that's going on? How can I extract meaningful lessons and actually contextualize the movements of these candles? I think putting everything in chapters specifically helped reinforce the...
So now if you look at this, right, the last couple of moves have been shyer and shyer. So now this is starting to look like it might be a reversal which goes long. But why has he put it above this level? He's just being greedy for no reason. Price hasn't gone here on this new trend yet. It is trending upwards, but this is his MO. This is what he does, is he likes to try and catch the next high.
Changing of price action might have been effective.
Watch him, even if it's in profit, freak out and bring this stop loss up to here and close it out early. If you're going to do that, you might as well have just had you take profit there in the first place.
Might have made the session more enjoyable, maybe not. You have to remember that I was...
Why did he move that stop loss up? That's insane.
Trading the entire day for most of this, yapping away at the microphone by myself, and there's a whole lot of, I hate this word, but cringe moments. I wasn't experienced at all with any type of live commentary, and boy, are these episodes rough to watch. Don't watch them. So, price action in terms of what story it's telling and splitting up different moments into chapters might have made these sessions more enjoyable. Maybe. I don't know. I kind of like it. The idea that trading is quite literally just expecting price to go to one line before the other line is more than just a, oh really, idiot, got any other genius insights? If you really think about it, you're...
Yes, I do. That's actually fucking genius, okay? Now it becomes, how far do I put each line apart? Why would it go to this line before it goes to this line? At what point is it more likely to go to this line before this line? What information gives me that? And then I know whether that should be the red line or the green line, because if it's more likely to go there, I should put it there.
Betting that while price action may eventually go to the stop loss, you think that it will actually go here first. From there, it's then about, okay, so what clues can I use about whatever is going on here to make it more likely that this line will get hit first? What can I use to determine that? It was something I was thinking about at this time. Again, not meant as a step to instant profitability, but a step to contextualize market movement.
Yeah, brilliant. It is still brilliant. I think he moved the stop loss here, or did it actually trigger take profit? I just want to check this. Right. It's not the way that I would trade, right? But I understand his process and his thinking, and for what he does and how he does it, I think that is a great insight or way to think about it.
Not meant as a step to instant profitability.
Does he move the stop loss?
To contextualize market movements.
Yeah. So he keeps moving the stop loss up and up and up and up and up.
Learning itself. Now, here's a peek behind the curtain into what I was thinking about outside of the recording. Now, here...
Look for candle confirmations might be a bad idea. Wouldn't you that just be a codable strat? Yes, it is. You have to trade solely on the strategy of where you think it will go next before going somewhere else, right? Discretionary targets. Can acknowledge shapes and stuff, but come on, if an indicator do it, it's not a good strat. Why not? If an indicator can do it, it's a great strat. Because it means you can just take the thinking out of it and the prediction out of it and just follow what the indicator tells you to do. Don't enter at the top if you're going long. It's good entries or bust. Okay. I mean, I was saying before that on a continuation, on a consolidation, entering at the top on a long is actually a good idea. Don't do something that looks embarrassing if it doesn't work. It's just counting on luck to enter into a trade in the direction of hoping that it's gambling. Instead of going back to I think you need a new list of what to look at during the day, refine it. Today's first trade was okay, and the second one was like, what are you doing? Slowly moving up, the red candle marks a change, is now consolidating. That huge candle marked a big change as well. It was like a transition, new chapter where prices moving down. Pay attention to candles that change the story. Yeah, because he looks at things through that story context. Okay. Whatever. You interpret that the way that you want. I'm not into that kind of trading myself, so I can't actually really comment on that particular thing. And there's not enough market there to make a contextual discussion on that anyway.
Here's a peek behind the curtain into what I was thinking about outside of the recording.
Go to smaller time frames when it's choppy. Worst thing you can do. Oh, okay. Well, he thinks he sees something. I mean, if you want to trade the chop, then yes, a smaller time frame makes more sense. Pivots rarely work. Your brain sees a recent low and is like, okay, go long and put the stop there. Look at the chart. Pivots almost get pushed through. Rarely are the lines. Times where it gets all the way down. Okay, so one of the nice things about this is that he's making observations based on what he's seen on the chart on, I imagine, I hope, a single instrument. He is learning the nuance and intricacy of the single instrument that he trades on. Because on US Jippy, it respects pivots beautifully most of the time. But on the S&P 500, that thing loves breaking through pivot lines. So does gold, right? So learn your instrument that you're trading on. Each one has different rules, man. Market context is what you'll learn over time on whether a pullback is a pullback or a reversal. A pullback is a reversal. Is it? I believe that SMC calls them fair market gaps, but it could be random noise too. I mean, a pullback could be random noise. Yeah, alright. Alright, it may not be a full reversal. Pullbacks exist. Yep, okay, I'll shut up. I was wrong. Maybe we can use things like how aggressive was the drop before the pullback. Oh, interesting. He's reading more price action into price action. What's happening up to it? Right, he's reading into price action. This is good. What kind of day has it been? Entries are always the most important. Arguably true. Make sure your targets are based on what happens most of the time. Don't put it far away hoping this will be the time it shoots through. Yeah, you're better off to take the safe 50 than try and bet the moon on 150 that only happens 1 in 10. You're trying to get 3 times the target for a 1 in 10. All of a sudden, you're on a negative profit, a negative expectancy, right? If you take the one that hits 70% of the time for 50 points, is better than taking the one that hits 5% of the time for 150 points, because the 70% will be making money and the long run will overall be losing money. No, it's good advice. I think that's a good observation.
There's far more writing than this, like a lot, and with pictures of charts and everything. But it's too much to go over, and it won't actually help you with your own trading, so feel free to pause and read if you'd like. Some stuff about price action, categories, chapters. Alright, back to old me, or younger me.
This is something I made last night after feeling like an idiot for making the same mistakes I made in the first week. So this is what I'm going to look at a few times an hour. Everybody's problems are different. Mine's being a dumbass. Okay, I just took a good look at my flowchart thing. I think I might go long here. Well, I didn't press the buy button. We have to experience every problems that we can have a solution for it to prevent it from happening again. That's okay. Just have to add it to the notes. Someday I'm going to be good at this, and I know that. I know that because I will never give up until that happens. I just wish there was...
Plan A is to be a trader. Plan B is to be a trader. You are winning at this, my friend.
a micro of the micro. Because 4 points being $20 doesn't sound like a lot, but it feels like a lot. Ain't no way it's not pushing through on a day like this. Yeah.
That's a lovely trade. No, don't.
Sometimes I say a lot of contradictory things.
That's a lovely trade.
Which is a reflection of the fact that I just say whatever I'm thinking, as well as that I'm learning. I will never ever think I have figured everything out. And I think that's one of the advantages I have in my
I'd be 50-50. I'd just take that right there, bro. Oh no, I mean,
except the idea of
what is that? 1 to 4? Oh, I mean, why is that high? I'd be confident in putting the take profit through this line, right? In fact, it's actually hit this line already. That's, I mean, you do you, brother. I can't see what else is going on back here, so I can't comment, but... okay.
Covering the chart and indicators.
I would be very surprised.
Not much has happened.
I'd be very surprised if it doesn't go down. Yeah, I thought it was... That's why I was like... Yeah, no, that's exactly kind of... Yeah. Could you not see, by the way... Could you not see that the upward momentum had been stalled out and that it was now like... It's easy for me to say this in hindsight after looking at this, right? Obviously. But you could hear it in my voice before I got to the next screen, okay? I was already like, wow, yeah. I was like, I'd have put it here, man. And then it's already hit. Like, I'd have... Why is it up here? Why? Yeah. And this just...
The chart and
happens to validate my question right
indicators.
Here. Right?
As you can see...
I mean, I wasn't wrong, but... Buddy, I'm sure that Iman looking back at this will look at this and say the exact same thing.
Not much has happened since, 13 o'clock.
Whoa. Not much has happened. Buddy. This here is a breakdown. This here, you take this all the way down here somewhere. Not much has happened. This is an entry signal, bro.
See, not much has happened since, 13 o'clock is. Wow, that is just crazy. I really like being down somewhere between $30 to $50, kind of my preferred way of the day. Yeah, my preferred way of the day. That makes sense. Okay, but you make me want to keep living, so thanks for the support. I ended up just taking out one of the charts over here. I feel like having all those different time frames up was just messing with my head, especially since they weren't all that different. So
what is this?
And I like this much better. My most helpful
what are we actually trading here?
If the trade doesn't work, are you going to look back on it and wonder why you traded it? I haven't taken any trades yet today, but at least I'm learning that it's less about what time I trade and more about what price is doing. My current problem is the fear of losing money, which is partly reflective of my fear of losing money, but also reflective of how I don't know what I'm doing. But I'm...
Now, if this is the same... I don't know if this is the same setup as it was earlier. Is this the same? Because if it was, I was right about the downturn, right? I don't know.
Trying to learn this through trial and error, making a bunch of mistakes, taking a crapload of notes, finding the common denominator between those mistakes, and using that to create notes that prevent me from doing it again. I'm not sure what time I should start trading. Maybe 10? Because all this is good action, although it is a bit volatile. But at the same time, volatility is how you trade, you know?
No. I mean... You can. It tightens spreads up, which is nice. I don't like high volatility times. They drive me crazy.
It makes money when it does nothing. Starting much earlier today, and I want to trade the morning session, not waiting until lunchtime and beyond that where nothing is happening. It's scarier to trade in the morning, but that's where the action is at. So, let's lose some money.
take some notes. It feels like
Good
the
boy.
entry is so particular and it matters so much. Each tick matters so much on MES. Whereas NASDAQ, you could be off by like 3 points or whatever and still be fine. I think there's like less pressure to get a good entry on the NASDAQ. At least that's how it is in my mind because it moves more. Maybe. I'm like a metaphor. Okay, I know this looks insane, but I mean, gross realized P&L $35. Obviously, I'm gonna keep experimenting, and don't be going in the comments going, "Oh, you can't trade like that."
Yes, you fucking can.
Maybe.
No, you absolutely can. Look at this. Look, you can absolutely trade like that. This puppy. Nope, the other puppy. This puppy. Look, back here somewhere. A couple of days ago. Hey, where's the grab? Okay, grab. Look at this. Where is it? Oh no, it was on Bitcoin. Was it on Bitcoin? Might have been on Bitcoin. Open depth of market, open chart window. I'm sure it was this guy. Yeah, demo account. This is it. Look at that. Wait, stop moving my chart on me. Thank you. Look at those trades. That's a lot of trades, bro. Look at that. Unfortunately, I started trading at this part of the day. Otherwise, I'd have made something on all of that. I gave up, went to bed, made a bunch on this. There's like 100 trades in there, just so you know. Oh, look at it. See? Look, at these levels, like I'm trading so heavy on these levels, I was playing with an idea. But yes, you can absolutely trade. Yeah, and then hold it. And then, why did it hold all that and not close at any point? This is an algo, and I haven't spent enough time on trying to finesse it. So we'll come back to that another day. But yeah, there are strategies out there that trade like crazy.
A month from now, I'll be like, remember that stupid time I thought that scalping every candle was a good idea? Or maybe a month from now, I'll be a billionaire from scalping every candle, and you're gonna look stupid. Probably not, but most likely somewhere in between those two. Okay?
I hope so, brother.
Listen, all of this information back here is completely irrelevant to doing fast scalping. Like, this is all that I need to look at. Trying to ride this all the way back up past this. I guess
why does he do the
quick scalps can turn into holding a longer position.
Yes.
Dang.
Oh, that's gangster. Bro, that was gangster. But I'm still gonna challenge you on why did you pick that level?
This looks so funny. Let's do this for a few weeks. Right now, all the notes you wrote kind of don't apply anymore. Some of them do, but at the same time, a lot of them are not really. The only thing you have to watch for now is the right level of volatility and not trading consolidation. So like 950 to 1050, probably more than that, and then maybe 330 to 350.
Bro's found something, eh?
I know it's early, but it really feels like this style of trading is what I was meant to do. You know? It just feels so much better for me than what I was doing before. This is probably the first day where I'm actually green, which makes me happy, but also, you know, gotta focus on learning and not on the money. Alright, I'm feeling really good about today and my trading journey going forward. This is exciting stuff.
For me, that was a horrible... This excites him? Oh, I hate this. Different trading styles, bro.
And my trading journey going forward. This is exciting stuff.
Oh, a montage. All right.
On the mini, that would have been $24 in commission. and $310 in profits. And that was one of, if not the most pivotal moments in my journey, because that's what learning looks like. Not hesitating to take a trade because of the fear of losing money, not overanalyzing or overthinking, just absolutely going for it on a sim account and seeing what lessons can be extracted. That's the type of experimenting that beginners should be doing. So, obviously this isn't a magic profitability switch or a true edge yet, but it is the start of something great. And remember, this entire video has nothing to do with me teaching my personal trading strategy. It's about the overall lessons in the journey that apply no matter how you trade. On day 23, I said it's less about what time it is and more about what price is doing. Yes, might sound obvious, but still an important realization. That's what led me to trying to trade in the morning session, which is what led to the crazy scalping idea, and so on and so forth. Don't put yourself in a box of thinking you have to approach or do trading one way. Who knows what you might learn or what progress you might make by just experimenting and going against what you've deemed as logical reasoning, or maybe going against or at least questioning what you've heard as standard trading advice, which almost always comes from people with no proof of profitability, let alone people who have been proven to be frauds. The Nasdaq, NQ, and S&P 500, ES, will move similarly, but NQ has more total points of movement when you compare the same moves. For example, this move on NQ was 98.5 points, but on ES it was 22.5 points. This made me realize that the entries and exits on trades were less punishing on NQ, because missing a point on ES is a higher percentage of the total move compared to NQ. Simple math, simple logic, just something to put in the box of, oh yeah, I guess so, sort of worth thinking about ideas. That's also a good thing to bring up to further demonstrate the type of analysis and learning I was doing during this time, which was about trying to make as many objective observations as possible. We're now entering the phase where you truly begin crafting and developing a trading strategy. There is no edge yet, just the beginnings of an approach and system that you keep refining, learning from, refining, and learning from. Think of this phase as
My phone's
creating
flat.
the...
Back soon. Okay. Drink time. Ooh, coffee. Drink time. Beat stop. Beat stop. Bum, bum, ba-dum, bum, bum. Bum, bum, ba-dum, bum.
lens through which you you understand, learn, and view how the market moves.
Now, I just want to go check this thing real quick. Yeah. Okay, so blue to red to blue. It goes down in a minute. Doesn't matter, man. I've already made a thing, so it doesn't matter.
Me, and only for now, that's what I called super scalping. Maybe for you, that's using order flow, volume profiles, support and resistance, mean reversion, indicators like Bollinger Bands, or something else. These are just the tools we choose to all learn the same thing, but
Bollinger Bands are terrible because of how laggy they are.
More in-depth talking about that towards the end. We're about to go through many months of trading in a relatively short amount of time, because I'll only be playing the most crucial highlights, specifically the parts that can help you. For example, if I make a realization about my approach that applies to everyone regardless of how they trade, then you'll see that. You will not see me being like, actually I should have gone long there instead of shorting. So again, this is the phase of creating an approach. And, compared to the start of the video, we're going to move through the trading journey timeline much faster from here on out. Of course, I'll pause when necessary to do some talking. Enough yapping, let's continue.
Alright, I'm currently trying to work out what the best risk-reward pointage is going to be, and using ATR.
There isn't one. You shouldn't be targeting a specific risk to reward ratio. I think that's a fallacy.
Try and determine what will be the best. I am trembling like a baby bird in a rainstorm. Or just a human baby in a rainstorm. I'm going to get a bunch of pictures together of when it's good price action to be trading, and then I will use that to look at before tomorrow when we start trading, just to make sure that it's good to trade. I will never give up. Never. I'll see you tomorrow. Gonna take a screenshot of that, including the ATR, because I was actually doing a 5-point stop and a 7-point profit target there because of the increased volatility, which might be the move moving forward. They are replacing the entire roof of the apartment. What? I'm just kind of experimenting right now. I need to take a lot of trades in order to collect data, so I can combine everything, the time of day, the ATR, the type of price action, all of these different variables together, and see what works. Best. I understand.
Yeah, I've got thoughts. I just don't quite understand where this is going yet. At the same time, I had a trading setup that was very, very similar to this. And I was just watching his one thinking, wouldn't it be better if you inverted? And all of them, I'm like, oh shit. I need to go back through my ATR probabilities scalping system and see if it works better inverted.
Dan, you want to help, but there's a reason I'm doing this on the sim account. And unless you've explored this type of trading before, then your experiences probably don't translate to this type of trading. I'm putting too much emphasis on variables that pale in comparison to the effect that just price action has on how this is going to work. What time it is doesn't really matter, how long I trade doesn't really matter. The thing that I should be collecting data on is the auto break even and which bracket order to do based on ATR. So 2 times the auto break even stopped me from, at least I think is going to hit the profit target. Alright, that's 3. Well, that makes it pretty obvious about what to do moving forward, but at the same time, this was only one session. But in a situation like this, where the candles really aren't moving that much, like even going for just 5 points, you're probably going to get a pullback just because ATR was...
Not basing decisions off a few examples, not doing all or nothing thinking, trying to understand when and why auto BR is good or not to use. Find the underlying reason for any variable like this is great for learning. I didn't even know there was an auto break-even mechanic.
Down quite a bit. So in that specific situation, I should not be doing the auto break even. So I guess with like everything, I gotta base that decision off what price action is doing. Some of it's better suited for auto break even, some of it's not. Like in some conditions, it's like that move is either gonna happen right now or it's not happening. And that's been the case for most of the time, but in instances like this, that just wasn't the case. Goes forward just a little bit, comes back, then goes forward. Whereas in higher volatility, it's like it's either happening right now or it's going there just a little bit and then going the other way. That'll be something I will work on moving down the road. What? Hi, I'm gonna do a little experiment today and try scalping the open. Oh, worst comes to worst, doesn't go that well. What do we do when we find stuff? We add it to the notes.
Why are you not in
Find
that
new
trade?
problems,
Why are you
solve
not
them.
in that trade? Okay.
Stop going for little pop-ups during clear up or down movements.
Yeah.
It's not worth it. Ideally, I would like to be on the cash account by the start of 2023 or possibly sooner, but since we're in this long term, really doesn't make any sense to get started on the cash account now, and we're still kind of...
It's amazing watching this and watching other people trade and realizing how much I actually know and understand just watching just candles. Random candles. I don't even know what instrument this is. I'm just watching these random fast candles and I'm seeing these good trades and terrible trades, and then I see them work out like every time. It sucks. It's disgusting. And the reason it's disgusting is because I can do it when I'm watching other people. And I really struggle when I'm taking it personally and putting my own money on the line with this particular style of trading. But when it's someone else doing it, I see it and I'm instantly like, yep, there's the trade, clear as day. And they do the other thing and it drives me nuts. And it's like, what should be driving me nuts is the fact that I'm not taking those trades that I'm telling other people off for taking. Like, I'm not taking the correct trade that they should be taking myself. I'm not seeing it in the moment. It's easier watching someone else and critiquing them than actually taking those trades yourself, because the pressure is so fundamentally different that it shuts something down in your brain so that you don't see these clear as day trades.
Tweaking stuff. Future, I'm in here, because we're now at a key moment. The creation of my first version and very rough draft of a trading strategy and framework on which to base trades. I know that may come as a surprise based on the very limited clips, but that's because those episodes only had the live trades and immediate reflections, most of which wouldn't be helpful for the point of this video. The real work was done privately off of YouTube, analyzing the trading sessions and doing a ton of writing and theory crafting. When working on this video, I collected all of my trading documents since the day I started, and I discovered that they contain over 70,000 words. At this point in my journey, though, that total was 17,000.
To be fair, my book's at about 185,000 words, so yeah, I get it.
Could I have made the same progress with a tenth as much writing? Probably. A bunch of that was just fluff. I'm just saying this to reinforce that the progress you make will be due to real work, not just random trades and calling it good. But I'll show you exactly how to structure that learning in just a sec.
Interesting.
So many of you are at the...
I like the fact that he's pointed this out, that he said, look, you guys are seeing these trades and me going, good, bad, blah, blah, and you're not seeing the months and months and months of work that's gone in behind the scenes on this. I really like that he's pointing this out.
Stage, the first development of a strategy that explains when and why a trade should be taken. And this is important, with the knowledge to know whether a trade was good or bad based on the system being used. But we're still making...
Right, that's a key qualifier. Based on the system being used. In other words, did you take a good trade because you took a good signal and got good timing with good discipline and good risk management, or did you go and do your own fucking thing?
new mistakes, learning new lessons, and testing out various ways to implement the approach. Not consistently profitable and not even using real money yet, just lots of good progress and ready to continue improving. There's only a couple things to mention in regards to the clips I played during those few months of trading, which all come down to how you should think about the fact that this is the development stage. We're not done yet. Any decision you make on creating rules for the approach should be backed by lots of testing.
Dunning-Kruger cycle, and he's at the bottom somewhere. No, I don't know where he'd be on the Dunning-Kruger. I think he kind of skipped it.
That's why I included just one example of me talking about using an auto break-even feature on my trades or not, and more importantly, the nuanced conclusion I made about it afterwards. This is what I was working on during the 3 months that just passed. And I've written a
See,
few
this is
examples
crazy.
of
Hang on. Will you ever move the stop loss or profit target, and if yes, by how much? I've never seen him not move it. In the entire hour that I've watched him take those 100 or so trades, I've never seen, or 200-300 trades, I've never seen him not move the stop loss. So for him to not move the stop loss now would be almost a very hard habit to break for a little while.
Questions you should be asking yourself. And I really do mean examples. I wrote this in like 1 minute and called it good. These apply to every trader, whether you're making your own strategy or tweaking an existing one. It takes a lot of time, trades, and work before you can answer all of these questions with zero hesitation for every single trade you take. Obviously, right now, at the first draft of a strategy, we can't answer all of these, but we still use them to guide our learning. As an example of eventually reaching the final draft of a strategy, which is what we're working towards, it means you could watch a recording of your trades from a month ago and instantly know whether a trade was good or not based on the entry, not whether the trade works out or not. So when you're designing a system, these questions are simply examples of how to frame your learning. If it seems overwhelming, just think about this. Every single aspect of trading and all that it entails needs to be focused on. Although in retrospect, I'm not sure how that sentence is supposed to help with being overwhelmed. Anything that just reinforced how much. Never mind. So, not just why you're taking a trade, but the trade order type, whether you move anything or not, how you'll take profits, and everything else you could possibly think of. The way you trade is going to be different from someone else. Plus, by doing the work required to answer those questions, that's where big learning happens. Here's an exciting one: spreadsheets. Yep, real trading and learning can be boring. Some of you might love spreadsheets though, probably with a strong correlation to introversion and being fascinated by trains, which, to be fair, are extremely cool, almost as cool as lizards. The more the merrier when it comes to recording information, because it's less work to ignore a column than it is to go back through all of your trades in order to add in some new stat. So, here are examples of things you can collect information on. Just like the previous section, I brainstormed these in a minute and will not be cleaning it up to look better. One particularly helpful thing I don't see much is tracking price action conditions. Just remember that in general, there will be many correlations that'll happen by pure chance, as well as due to just not having enough data collected. But ew, gross. That sounds like research methods. I'm not going to get into that, so just feed all of your questions about representative sample sizes into your favorite AI chatbot. We'll see how that suggestion ages. Also, your broker should keep some very basic stats about your...
Oh, mate, that's brilliant. I mean, this year it's not a bad idea, but we'll see in 2 or 3. Yeah. 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 His jokes, man. His jokes are so good. That annoys me, but it is what it is. I need to stop flicking to it and just let it do its thing. And just trade it when it actually does something. I'm tempted to go play with it, but go interfere with it, but I just got to let the trade play out now.
Trades. But the fun stuff that actually teaches you something mostly has to be done by you, unless the average broker becomes more advanced after this video comes out. For example, win rate over a long period of time doesn't mean anything representative unless you separate the sessions where you allowed moving the stop loss and profit targets versus keeping everything stationary from the moment the trade was initiated.
Right, because you're talking about two different sets of trades, okay? So you can't say, so what he's saying is, if you've got a positive win rate, right, it doesn't mean anything if one day you traded one system and a different day you traded a different system, but then lumped all of those together and said, oh, overall I have a positive win rate. One method might have a 95% win rate, but a 5% profit token. Whereas the other one might have a 40% win rate, but a 3-to-1 profit token. The one with the lower losing win rate is your profitable system. Your 95% win rate is losing money. Because every time you get into profit, you go up one tick, make 1 cent, because it breaks down onto that, take profit onto that stop loss again. Like, yeah, you can't mix and match like that and expect to have useful data that's going to help you with your trading program. It's great. It's a great observation.
One giant ball of data and stats means nothing if you kept changing stuff the whole time, which is why the...
Right. One giant ball of data and stats is only meaningful if you can narrow it down to a single data point that changes. If you can make every other data point identical and then track one variable to see how the results turn out on that one variable, you have some meaningful data. It can be more complicated than that. You can use mesh infrastructure in order to track multiple stats. But let's not get into that until you understand the basics, right? So, yeah. This guy's done some kind of statistical analysis. Maybe he did statistical psychology. That would be interesting. That would be a great subject to major in if you were going to be a trader, because you're learning stats, math, and trading psychology. Like that would be an incredible course to take, actually.
Broker report stats typically don't mean much without some separation work by you. Oh god, we started doing research methods again. How could this happen? Now is a good time to bring up one of the most important topics in all of trading, as you make your way into the new phase of really crafting your trading strategy. You must understand that you have two hypothetical paths to achieving consistent profitability in trading. The first is a 100% quantified and fully automated system/algorithm that could run itself if you coded it. It is rules-based without any freedom on decisions, which means when your criteria for entering a trade is hit, you enter it, and you never do anything that isn't in your pre-written instructions. Or
That's
the
me.
other option involves discretion, which means that while you do obviously have a trading system, you give yourself the freedom to make different decisions on a trade-by-trade basis. This is often misunderstood by new traders as discretionary trading just being completely guessing, but it's not. Proper discretionary traders have a clearly defined system and can easily answer all of these questions we went over here. They just have some part of the process that isn't 100% rules-based, which could quite simply just mean that the criteria for entering a trade is hit, but they're going to use discretion to increase the profit target just a little bit further than usual. That's discretion, and no matter how quantified and clear your strategy is, including your rules about trade management, you are a discretionary trader if you have any type of say in the moment about the trade you take, the stop loss and profit target and whether you move or adjust anything, or the decision on taking or not taking a trade that technically meets the criteria of your strategy. Both paths are possible. Both paths are obviously difficult. The length of this video and amount of information covered will make most people click off And I'm very confident that those who are still here understand the point I'm making. I just have to cover it because it's important to know when structuring your learning and progression. The majority of consistently profitable traders I've come across have an incredibly deep understanding of their trading strategy and use some degree of discretion, which again could be something as simple as this.
His discretionary description is actually systematic. The fact that he's using some discretion does technically make it discretionary, but if you're basing your discretionary decisions based on an overall overarching rule set, then it's still codable. It's just what it is it's like a cloud of ideas that you haven't pinned down yet. You understand it, but you don't understand the nitty gritty well enough to explain every tiny little nuance to someone to code it out for you. Yeah. I actually go into discretionary versus algo trading or systematic trading in my book. So I have a slightly different take on it, but for all intents and purposes, I mean, he's wrong, but he's not that wrong. You know, it's good enough. No, I don't know. It'll do. Yeah, the point being that discretionary trading looks like random gambling to outsiders. But to those who know what it actually is and actually have a discretionary system, it's still got a lot of rules. There's a framework that it works inside, and the discretion is little freedoms that don't break the overarching system, right? Yeah.
Deciding to move a profit target just a little bit, because anything you do that isn't 100% determined by rules and criteria means there's discretion involved. That part cannot be taught to you, it can only be learned through experience. The degree of freedom you give yourself to manage trades and enter or exit positions varies by person, but ideally, you want everything to be quantified as much as possible. Remove ambiguity and choice as much as you can, because that reduces the chance of human error.
As a beginner trader, I would highly recommend a purely systematic approach because it will help you with understanding or learning the fundamentals. And there'll be a point where you're like, oh, no, yeah, whatever, man, you haven't learned properly yet. You've still got time. There's still time. You've still got learning to do. Just, yeah.
AKA, you can't do something stupid if the opportunity to be stupid isn't there. Right, we just covered a lot.
You just quantified what I couldn't, what I couldn't extrapolate, what I couldn't enunciate, what I couldn't, yeah, words. He just quantified it. Yep, brilliant.
And please remember that any other information I come out with after this that might help you will all be on my website, imantrading.org, for free, forever. I thought about sharing a ton of my trading notes from during this phase, the one leading up to the first draft of a strategy, but I'm just going to show a couple screenshots. The reason is that they are not formatted for someone else to read. A lot of it only makes sense to me, and much of it is just too nuanced and particular. Sharing it would require me to justify and explain the deeper meaning behind various statements, and that would take a lot of time without adding much value. And remember, the notes are in addition to data collection and spreadsheet work. However,
let me just do this for a second, and then I'm going to chuck this here so that I've got it here, so I can watch the race
deeper
later.
Meaning behind various statements, and that would take a lot of time without adding much value. And remember, the notes are in addition to data collection and spreadsheet work. However, I will show one version of a reminder document that I created at this time in December of 2022. Just a good way to show what I was paying attention to and trying to work on. But most of what you end up writing for something like this will be extremely short simplifications of far deeper lessons and concepts. You might read these and go, okay, interesting. but I know that there are dozens of implied lessons and concepts within each one. I'm not going to understand the reminders you write, certainly not at the level that you will, and that's where experience and time really demonstrates true learning and knowledge. So just use these as examples without analyzing the meaning. Just kidding. Actually analyze the meaning of go ham. If you want to see the video that I made on my strategy at this point in my learning, just for examples, not because we trade the same, and where I obviously clarified that I was still learning and not profitable yet, then the description below this video will contain a link to that. Just for context and a reminder, we're right here. And over... my god. And over a year...
I love this kid. That's 3 months of work. He's put in more work in 3 months than I probably put in the first year.
Year of continuous work at this same level of commitment will pass before my final draft of a strategy is finished, and yes, which I still trade right now. And from there, over a year and a half will pass until I start getting consistent payouts from prop firm funded accounts. Not sure if I've said this yet because I've been working on this video for months, but remember that you can always experiment with trading with market replay tools. Also, while I was learning, I was recording a chart that didn't display any of my trades on my third monitor every morning. That way I could watch it back and practice trading at other times, like the weekends, later that night, or in the mornings before starting trading. Okay, now that you have your first draft of a strategy, let's go to the next phase where you continue experimenting, refining your strategy, and collecting meaningful amounts of data. I'll see you in an entire year unless I have to pause before that. I don't know. Have you fallen asleep yet? Did the spreadsheets take you out?
I really want to take these trades on the real account, but at the same time, it doesn't actually make any sense to do that when I'm still perfecting parts of the system. So, sim account for now, even though...
Dude, Chad, honestly.
No, I would love to do it on the real account. Bruh, I can't say it's intuition because I don't have enough experience. On another screen, I have this chart up, and I'm going to record from 9:30 to about 9:50. That way, in the future, I can...
I've had enough. I'll watch it later. Will I be on tomorrow? Yeah, probably. Fuck, I knew that fucking... Okay, stop. Don't touch it. Okay. See this guy? Set him up as a ring bing. Alright, so don't touch it. I'm done for the day. You guys, I think I am. You guys? I don't even know if there's anyone watching anymore. No, just me. Okay. Peace out, brothers and sisters.